Good morning, good afternoon, good evening. I'd like to welcome you. Yes, I'd like to welcome you and everybody else to another version, exciting car chase, stunt work, and drama of TopstepTV opening call. Congratulations, you're at the right place at the right time, and we have an exciting, informative, educational programming for you today, as usual. Today and throughout the week, we will be your trading buddy, your trading mentor, your newscaster, fellow trader, and even sometimes that voice in your head that says, you can do it. So get yourself ready for some top-notch, up-to-date market and trading knowledge with the Hoag, Johnny Hoagland. Hello, John. How are you?
All right, Eddie. How are you this morning?
I am. I'm alive and kicking.
That's always a good thing. That's
Yes.
a good start to the day.
It is a good start. You get up and start kicking stuff. So anyway, we've got a lot going on here today. We do have a special guest, KV, I guess, going to be here for us for our interview, and of course, lots of other good things. But I don't know, Johnny, what do you got going on? Are you having a good night? Good day?
Yeah. So far, so good. I'm looking forward to that interview that I'm doing today with KV Dima. It's going to be another good, interesting, and hopefully informative and educational opportunity for you to meet another professional trader out there in the world. I'm looking forward to it and seeing what these markets have to offer today.
Right. It's power players, and of course we got group coaching, and that'll top off the day. But Johnny, you know what? We've got some news here, some headlines. And, one of the things here is we're seeing that the U.S. stock futures moving down here, pointing on a pullback from the gains of yesterday. And, this is, we're almost at the end of September. And this is going to track out for a lower September, see what we can do here. But otherwise, Dow futures down 0.3%. S&P down 0.4%, and the NASDAQ down 0.5%. 345. House of Representatives, they represent what? I'm not sure, is set to consider 4 consecutive back spending bills for the upcoming fiscal year today. Although they're not widely expected to become law and may force possible government shutdown October 1st. So we'll see what happens there. But Johnny, what do you got?
Well, as far as economic numbers today, 8 o'clock, the Case-Shiller and FHFA home price indices just came out. 9 o'clock Central Time, as always. We're always talking in Central Time. We're looking at the consumer confidence numbers as well as new home sales. You're mentioning the House of Representatives and the potential government shutdown. The credit rating agency Moody's has warned about that shutdown, saying that it would underscore the weakness of U.S. institutions and governance. So not really looking good for credit rating agencies if we were to come into a government shutdown. So lots of questions about that. As far as the VIX is concerned, it's a little bit higher this morning, but lower than at this point yesterday at 17.53. 18.19 was where it was yesterday at this time. The dollar up to 105.9, and the yield on the 10-year 4.5%, but certainly looking like it's heading to the upside, as it says in the title, the 10-year yield curve, 10-year yield back up to really high levels. So it's going to be another interesting trading day, ladies and gentlemen. We're focused here on context, risk management, and patience.
Beautiful. Shares of China's Evergrande, that's the world's largest crude importer, slumped for the second consecutive day. And what's happening is they missed an onshore bond payment. I don't know. I didn't know they needed to get bonded out, but I would call Chico's bonds. Remember Chico's bonds from the Bad News Bears? It was the Bad News Bears sponsor, Chico's bonds. So let's give them a call and see if they can help out. But shares of Evergrande fell by 8.14%. So that's a pretty big hit. Another thing too here, John, before we get to our charts, Space Force. You ever hear Space Force? Hear about
Yes. Yeah.
that? It's considering setting up its third base. Commander, I like to go, pigs in space. But anyway, the commander said that's also considering setting up a hotline with its counterpart in China. I wonder if China knows this. But anyway, if you're wondering what Space Force is, it's a military branch of the nation's armed forces that conduct military operations in outer space. So in case we get invaded by aliens, we've got some sort of first line of defense, sort of like my deodorant. So, but anyway, Johnny, let's make sure everybody has their checklist, game plan, mindset. You're good to go today. Hopefully you are. And we'll start out with Johnny's charts. Johnny, what do you got for us today?
All right. Well, as we've been kind of talking about the last few days, even into the last couple of weeks, we've got a little bit of an increase in uncertainties in the economy and in the markets, and it's certainly showing in the marketplace. In the E-mini S&Ps yesterday, we had a bit of a pullback. This is, of course, still the daily chart. You can see it here on the watermark 1D, the daily chart. We always start a little bit further back. So yesterday we had an overlapping the lower range, but the market actually pulled back. It closed higher, but it was on lower volume, which isn't all that impressive, if you ask me, but higher open interest. So we may have attracted some bargain hunters perhaps down here. I'm not sure how much of a bargain it is yet, but that 13,000 increase in open interest I'm viewing as shorter time frame traders, some bottom pickers coming into this market, supporting it at least for yesterday. There was some news announcement that happened during fast markets yesterday that told me, you know what, I don't think we're going to be looking for shorts anymore today. And hopefully you were able to take advantage of that. So far today, we have an inside extended trading hour range, the market now coming off. But when I look at this, the market has been, since it broke out of balance, was out of balance and is setting up a short time frame area of balance as we speak. We did see an excess low yesterday on the daily chart. The fact that we're looking like we're going to open lower and below value is kind of telling us that any acceptance of higher pricing is short-lived. The extremes of the current area of balance I'm viewing as 4,400 and 4,340. We're about 10 points from that now, 4,340, relatively close to yesterday's low. So those will be the kind of extremes I'm looking for the market if it is going to remain range bound. If we continue to the downside, we've got the test of the weekly kickoff low and then space down below that. Remember, the weekly kickoff low is the close of a gap that was left back here in June. And, that is one structural weakness that we can check off, but as far as weaknesses down below this market. So we did have that excess low. The market is in a downside market state. Unfortunately, well, I think rather fortunately, I'm giving this auction to the downside currently a C-. I don't think it's performing all that well. What it needs is new participation, new selling to continue this move to the downside, to improve the health of this downside auction. It's not something, again, I'm hoping for, but it's something that certainly could be in the cards with the uncertainties in the markets and in the world right now. So we've got an area of balance which creates that kind of less than average downside grade or auction grade of that C-. Taking a look at the 30-minute chart now, and we'll get this scaled up here so we can all see. And all right. So 4,400, the upper extreme of the balance that we're currently in. Our low yesterday, really, I'm looking at 43.40, 43.50 as an area of possible support in this potential area of balance. Is this a true area of balance? I mean, value has been moving steadily lower. Is this balance or isn't it? Is it a downside digestion type of situation? And I think we're going to find out a little bit of that today. On the 30-minute chart, we've got overnight inventory that is holding to the short side. We're in range for now and outside of balance from yesterday. The one thing that really gets pointed out to me is more off the profiles. In a normal variation profile with an extreme, the point of control is very high in the profile, and we did end up putting up a late spike to the upside yesterday. After 4 straight late spikes to the downside, we put a late spike to the upside. But with late spike rules, and when we open below the base of a late spike, it is marking rejection of higher pricing. We've been talking for days now about how we're looking for opportunity to sell strength. Something occurred yesterday in the 10 o'clock hour that kind of told us we may find better trade location if we're a little bit more patient in looking for shorts, and that ringed out to be relatively true. We did a lot of basing. We did a lot of range-bound activity here yesterday. Our afternoon pullback took us to last week's low. So rejection of higher pricing. I'm still in the frame of mind that we're looking for opportunities to sell strength. Got to see what we do here. If we open with a gap and we can't close that gap, I think a test of weekly kickoff low would be a very simple and visual target for traders to bring price to. So overnight inventory short. If we don't find what we're looking for in the overnight inventory, we could see a pullback, kind of what we saw yesterday, for a better trade location for shorts. If we don't see that, if we see sellers take control of this market right off the open, my first target again would be 43.25 even. Again, a normal variation, extreme day, late spike, rejection, overnight inventory. If we find what we're looking for, we bring in some new selling in this market, and that's what it's going to take to move this market lower. We're going to have to see, kind of where we open, and just remember that the market structure, though it may be a little bit range bound, is still putting in lower highs and lower lows. We're looking for opportunities still to sell strength. All right, take a look now into the NASDAQ, which is largely the same. We have the same breakout, weekly kickoff high up here now, the breakout, the continuation, the balance. I think the NASDAQ has a lot further to fall. I think it's been holding up much better. It hasn't taken out the swing low here from the 18th, where we have taken that out in the S&Ps. Volume continues slow, and that makes sense because we've kind of fallen into balance, and we added 4,600 in open interest yesterday, perhaps attracting some weaker hand speculator longs. We're not looking at longer time frame participation yet in this market. We're looking for it. When we find it, we're going to let you know that hypothesis is now in place. But currently, no, the range extremes, 14,780 to the downside, just about yesterday's low. On the upside, 15,025, the high here from Friday. Inside range, again, to try and stay patient. Again, the downside auction grade is a C minus. Again, much similar to the E-mini S&Ps. Okay, so here's the 30-minute chart. Let's get this to scale so we can see where we are at. Again, putting in lower highs. Well, not so much as the S&Ps, but still putting in lower highs and lower lows overall. Lower high yesterday, lower low on a pullback day. No true late spike, but we can kind of look at this as again, rejection of higher pricing. We are in range below value, perhaps looking for a potential gap. We got a kind of a weak low here in the NASDAQ. Okay, these tweezer bars initially were supportive, but they're kind of left as a mechanical position or a mechanical level that short time frame traders are going to be looking at. And remember, I don't think we're seeing a lot of longer time frame participation in these markets. A lot of this pull off has been created by longer time frame as well as short time frame speculators. So unless we start to see some new business coming into the downside, it might be a tough move for this market to continue lower. We want to see volume. We want to see participation. Momentum would be good to see a continuation to the downside. Again, not something I'm hoping for, but if we can find ways to take advantage of it as day traders, I'm all in for that. So overnight inventory to the short side, in range below value, probably not going to be opening with any kind of a gap. On the downside, the first thing I would look at is our overnight low for an opportunity. Our overnight high is all the way up here. That's going to be a tough, I think, trade for us to get up there without the advent of some sort of good news. I'm not seeing that is a potential opportunity, but we have to prepare for any potential outcomes here, right? So the profile, it was an excess low in regular trading hours, but not necessarily a very strong low, including the overnight yesterday. Normal variation, extreme day. Again, opening in range kind of puts me on my heels a little bit to think maybe we'll see better trade location as the day goes on. And we're going to see how this thing plays out. I'm interested to see what our good friend and CEO and founder of Topstep is going to do in the NASDAQ today. Always fascinated to see that. Right, and take a look at crude oil here. So this is the daily chart. It's pretty far out there. I mean, we've seen a substantial upside move, right? $90 everybody talks about. 92, 91, 80 is current weekly kickoff high. We're looking into last week, okay? This excess high here has been holding as resistance. Now, when we look at an auction, auctions die in excess. Price got too expensive. Buyers backed off. Sellers took over and swiftly moved price back lower. This is going to be a kind of a sticking area for the market to continue this move to the upside. And so with all of this upside momentum, this upside move, the market had to pull back. It had to either pull back or balance. Right now, it is evening out inventory through balance, not looking at a market that has had a full reversal in direction. It has more fallen into balance. So that excess high on the 19th is looming large. We have excess on this low, which is also somewhat looming large. The balance that we're currently in, I'm looking at 88.37, last week's low as one extreme, and 91.30 as the other extreme up here to this area of balance, because this is an excess high on the daily chart. We lost 3,900 in open interest yesterday. Volume has been shutting off, as it would be while the market is in balance and range bound. Take a look at the 30, Eddie.
I'm watching.
Alrighty. Here's the
right under settlement.
Yep. Yep. So 1, 2, 3, 4. Well, really 3. Here's the range. Took a look at last week's low in the overnight session. Overnight inventory was short. What is it now? It is largely reconciled. The market looked lower, has come back into range, and is currently coming back into value after the regular trading hour open. Try and stay patient. In the longer time frame, I'm focusing on those extremes. Last week's low, 91.30, the upper area of this area of balance, 91.30 right up here. Anything in the middle is probably going to be a kind of a tougher situation as we remain in balance. Anything in the middle of it tends to be kind of a random move. So my focus is really going to be on those extremes. Too bad I wasn't up last night at 2:00 in the morning to have an opportunity against last week's low, which is largely the extreme of the area of balance. As far as the profile from yesterday, it's a normal variation trading day. We looked higher, we looked lower. It was just an open two-sided auction yesterday. We settled right in the middle of it. Settlement again, 89.68. That yellow dotted line there, and we're right back to it. No overnight inventory, no gaps, no tails, no runs, no hits, no errors, nobody left, and we're coming into the 8th inning.
All right.
And now, Eddie, your gold is going to be a fascinating market today. We're going to have to try and keep an eye on this market today.
We took a drop, we pulled back, now we're taking another drop. Is another pullback in store? We'll find out.
So what we're seeing here is almost something very similar to what the S&P and the NASDAQ have experienced in the last few sessions. The market was coiling, higher lows, lower highs, basically a triangle formation. We have now shown signs of acceptance below this trend line. The next sign of acceptance would be below 1927, the weekly kickoff low. And don't forget, we've got the 200 session moving average, which is going right along that trend line very nicely. Opportunities are large. There is a large opportunity in gold today. Not going to suggest any direction levels or taking any trades here, but the situation is interesting here in gold. If we see what happened in the S&Ps, we're going to be looking at this swing low. There's lots of space down below that for continuation. Keep an eye on the dollar. If the dollar remains firm today, I'll be looking for the market to continue to price lower and lower. We've broken out of a long-term technical pattern. If the dollar continues strong, look out.
What?
Excellent, Eddie.
Was that the gold? Oh my goodness.
Well, let's take a quick look at the 30 now. That is good. That was perfect, Eddie. All right. So, come on. All right. There we go. All right. Overnight inventory was short. The shorts started to continue to get paid. They freaked out a little bit, but now here we are. We're moving back below that weekly kickoff level. If we stay down here, if we build energy, if we spend time, that's going to possibly mark acceptance of lower pricing. And in the current technical situation and watching the dollar, there is a lot of potential for this market. There is a lot of potential in either direction. If we fail to accept below weekly kickoff low with all these overnight shorts, there could potentially be a pretty decent pullback back to the upside. We don't know. All I'm saying is gold is in a precarious situation that offers bigger opportunities. It's up to you to make those decisions.
It sounds like something that join the military. It's up to you.
It is up to you.
It's up to you.
What did I just do?
You can do it. You can do it. All right. Got about a minute here, Johnny.
All right. We are, I think, looking like we've gone through everything here. I just want to go back and look at this daily in crude to see, there is a swing low down here at 1921.70. Below that, the next swing low, 1360. Below that, we've got another swing low at 1900. That's a big fat round number for us to start to look for. It'd be a pretty substantial move. I mean, we're talking about from here a $25 move down to that level. It happens. It does happen. Yes. Not suggesting that anything is going to happen for sure today.
Okay. All right, John, thank you very much. Coming up next here, we do have Fast Market. And of course, we're going to keep our handsome and knowledgeable Hoag with us here. We're going to bring in Michael Patak, and we'll see if there's any opportunities for trading. We'll be right back. And we're back, as I promised. Yes, we are. And we've got Michael with us today. Good morning, Michael.
What is up, Eddie Horn and John Hoagland?
How you doing, man? Welcome to Taco Tuesday here at TopstepTV. A lot of T's in there today. And hopefully that we can take that and show some talent for trading. Hopefully we got some opportunities here. But I'll pass it over to you. But before we do go, we've got Jack's got something to say here.
Ladies and gentlemen, can I please have your attention?
Yes, Jack. What do you got for us? This is going to be really cool. So pay attention.
All righty. Similar to yesterday, we are giving away 10 free 50K combines today. 5 of them. 10. In addition to the winners, we will give away 5 random 50K combines during the quiz. And then we are going to try something and see if it works. If you want to comment in this video, not in the chat, but on the comments under the video and say something that you've learned about trading recently, I'm going to try and take 5 random people from there. We may have to announce them tomorrow. This is our first time doing it. We'll see what happens.
I like
Jack.
it. Building the plane in the air, Jack. I love it.
It's going to be fun. All right, you kids, settle down.
Ready? Fire. Game.
Let's
horses. Horses.
We got the horses. All right. Inside a minute, ladies and gentlemen, get your horses ready, and we're just about ready to fire it open.
Okay, John. What numbers do you have around here and all around here?
All right. So we are in range below value. We put in a late spike in the S&Ps yesterday. We are marking acceptance below value. So even with yesterday's pullback, we're still in a place where we're looking for opportunities to sell strength. Right? So
yep.
We are open now The overnight low looks like an interesting opportunity for a potential target. I'm really not looking at the long side for anything today. I'm looking for opportunities to sell strength again. We thought about that yesterday. Something happened at the 11 o'clock hour where I said, you know what? I think I'm going to really not have to hold off to look for good trade locations if I'm going to be looking for shorts. And that proved to be pretty much correct. We ended up putting in a late spike. We're rejecting it. As far as levels here today, I mean, basing off of last week's low, this might be a level that might be a little bit resistant or supportive, depending on which side it comes from.
What level?
14,836 last week's low.
That's right up here.
Yes.
Okay, so, 14,836. It just
put the opening range at high at that level. We've just taken out the low of the opening range in the NASDAQ.
Okay, so off the 36, it sold off.
Right.
I think that high was like 38, 36, 38.
Yeah, I think it traded up through it just a little bit. 38 was the high. 36 quarter was last week's low.
I mean, there's your 20 handles right away. So that's a pretty serious move right off that.
Yes.
So that tells me a little bit of something, and that's selling strength was a good good move right there.
Yes. Yeah.
So we have that first call under our belt of that we missed, but it's okay because it's only a couple minutes into the open, but it's pulled off really hard.
Right. So the opening range is the high of the day in the NASDAQ and the S&Ps. As long as that remains, I'm only looking for shorts.
Hey, John.
I'm taking
David
notes.
Crossan's asking, what about the late spike, the high settlement price, meaning for the levels today? What's it sort of playing off of?
Okay, so it's not technically a real late spike in the NASDAQ, although I'm viewing it as one,
right?
Because after the 3 o'clock close, it continued higher on the 3 o'clock to 3:30 bar. It is a late spike to the upside in the S&Ps, but where we're opening is showing rejection of that level. So that's another kind of nuance that I'm looking to say. I'm looking for shorts. Looking for shorts, sometimes in all the wrong places. Still, though, that is rejection of higher pricing.
Okay. Thank you, sir.
I got short yes, I did get short on this spike. 18s, Jack, I'll share my screen. 18s, almost 19s.
So 18 is the bottom of the opening range.
Opening range is still the high of the day.
Yes, it is.
So to me, this is a cheap short-ish.
Yeah, we got to take out 38 to take out the high of the opening range.
Say that one more time.
We have to take out 38 in order to take out the high of the opening range in the NASDAQ.
Okay, make a move, NASDAQ. Make a move. All right, there's your
Hey,
move.
John, Brian's got a question here. Hoag, when you see multiple exact volume amounts in a spike, for example, yesterday's down spike with the final 4 ticks, 149 each, do you see that as bigger players moving the market?
I'm not quite sure where that is and what the question is asking.
Okay. When you see multiple exact volume amounts in a spike, yesterday there was a down spike with 149 in each. Do you see that as bigger players?
Can he be more specific? What's the time of the spike that he's talking about?
All right, you heard that. If you can, please do that.
I got back in at 26, got out at 10. 11, 9, 8. So I took 10 handles.
So are you carving, Michael?
Well, Johnny, don't jinx me.
I'm not trying to do that.
But yeah, so far.
Back inside my head, I'm going, "Wah."
Well, here you go. That's what you're jinxing me now.
Hey, Michael, what do you mean by 14,818? This is what Susan wants to know.
14,818. 14,818. Oh, that's what I was, just short. And then I covered. It's quick, short, quick in and out. Couple $100. Get a cushion.
Just let you know, the S&P has taken out the high of the opening range. The NASDAQ has not.
I just covered. It's dancing up there. I don't want to dance with anything right now.
Hey, John, Brian's coming back here. That one was a period, but I've seen it a lot in the profile. Just repeated volume amounts one after another.
26.
Is it Brian? Is it at an extreme of a move?
We'll find out.
I'm wondering if it was the afternoon pullback that occurred in the 2:00 bar.
Yeah. Trading research. We'll have Jack come back on again and explain the rules again here shortly.
Yeah, Jack is trying to figure this out, but Jack will. Just give a few seconds.
Third person. We're bringing it back this week too.
Yeah, why not?
Morning, ICT. Morning. Getting after it.
Top of the morning to ya.
All right, so 38s are the high of the day, or the high of the
High of the opening range, high of the regular trading hour session so far.
21.
Well, John, I think our gold is even heavier than it was when we talked about it.
Yeah. See, that's the thing, man. It's happening prior to the regular trading hour open, which makes it difficult to try and get into. You want to try and get in as close to those levels as you can. But we opened with a gap. We've had no attempt to close the gap. It's appearing almost like the opening range is the high of the session. I'm looking for shorts. It's going to be hard to get into. We may take a look at the more clear volume profile here as this market continues to the downside to see if we can't find a low volume node with which to participate.
Yeah, where's that at? Because I just got short around the 21s, but it had been sitting there while you guys are talking for quite a while. So I just covered the 27s. I was in that one for a little bit, but it wasn't getting any movement out of there. All right, I'm glad I got out of that short. Okay.
Yeah, there goes the high of the opening range. Now we got to see if this upside auction brings forth any overnight inventory that's likely to going to be kind of short. You know, here's where we opened last night, right here. A lot of weaker hand shorts. I'm kind of viewing this balance area as kind of a lot of reconciling of those overnight shorts. So, you know, if we're going to have an overnight inventory, I'm not looking for it to return all the way back up to settlement.
Settlement is a ways away.
Yes.
Numbers up here.
Value low from yesterday in the NASDAQ, 14,854.
54. Okay, value low from yesterday. Write this stuff down, folks.
Point of control from yesterday,
854.
894.
898. Sorry, 894.
That's the volume point of control on this platform. Let me see here, 14.
Okay.
For those that are new here, I'm going to be posting our Topstep checklist. This is a good place to write these down and keep track of them. So here's the PDF. Use it as you like.
Yeah, so I like his shorts up here. It's strength. I'm short from 37. Probably not the best place in the world to get short from, but I want to. It's just a one lot. I want to get light in here.
Okay. There's kind of a secondary level here that I like about your short. Okay. Yesterday we opened, we ranged, we put in the high. This is the afternoon pullback low, right? That low is 842.50, 842.50. So this was where the market came down to and rejected back to the upside. If we stay below that, this might mark rejection of this entire area up here and a continuation to the downside. So I don't hate your short. Afternoon pullback low or afternoon pullback high is a sneaky little level that if you look back, you might find has been useful. But everything can be useful at times. It just has to be the right situation.
I covered down here anyway. Scratched on the day. Okay.
Right now.
Yeah. Uh-huh.
Okay.
Huh. And I still like the shorts like you're talking about. But I don't 42s. I want to get a good entry anyway. This isn't that great. 32s, 42s.
Stay patient. There's going to be good opportunities. We're right in the middle of the range for the day now.
Yeah.
The day session range. Is there anything on the tilt?
The tilt is 70% NASDAQ long, 63% S&P long. Here's your 42s up here. And here's where I'll be taking a short up here. Short. I got short 37s just because it did another pop up here.
Okay.
And that's where I was, and then I covered.
I mean, you've got relatively manageable risk in this.
Relatively manageable, yes.
So, Ghost. Eddie, would you read Ghost's question for me? Ghost T.
Ghost had a question here talking about how do we interpret decrease in volume and increase in open interest happening at the same time?
Again, it's situational, but the loss in volume in the S&Ps and the NASDAQ and the increase in open interest in the S&Ps and the NASDAQ, which I'm pretty sure is what you're kind of pondering right now. The loss in volume on an overlapping to lower day with higher open interest typically is going to be some shorter time frame speculators trying to pick bottoms. Now, of course, every situation is different. But if there is a directional move and open interest continues to move higher over day after day after day after day, that to me is the more meaningful number. You're going to have days when volume is higher and lower and higher and lower. Yes, you want a volume to increase in volume as the market continues in one direction. But the open interest is to me the more of a real tell. Of course, everything is situational and nothing is 100% one way every time, especially in discretionary trading.
John, this is taking a little while. It just sold off from the 40s up there, a good amount from the 43s all the way down to the 23s. But we haven't broke, but we're breaking now. I'm short two still from 33. It was okay entry, but it's not
take one off.
Here in a memento. The floor needs to fall out from this thing, and 10 handles would be fine. But looking for a little bit bigger move right now. Hopefully, I don't get punished for this. I'll take one off. Johnny said take one off. Okay, let's let this run.
Yeah,
let's let this run.
Just a heads up here, in about 15 minutes, we're going to be having new home sales. So heads up there. And, of course, our consumer confidence. So top of the hour, heads up.
Mm-hmm. Stockpreneur, I love it. Thanks, buddy. Be patient, MP.
Be patient.
There we go. There's patience is paying off a bit on this trade. Okay, I covered 16s. All right, so there's okay, nice little pop. Wow, nice cover.
Yeah, good job.
All right, 500 cushion on the day. I like cushions.
Maybe you found value area low for today, and you covered it. That's a great job.
Thank you. I will put on a little bit more size now. Couple, 2, maybe 3, maybe 4, depending on how we set up next.
Yeah, but let this one come to you.
Yes.
Don't go
looking for trades right now. Yep. Good job. Or good. Thank you.
Mm-hmm.
Yes, sir.
Good suggestion, my friend.
Mm-hmm. So we had some folks. Bodart, 722 on the NASDAQ so far.
Nice.
Yes, Jerry, 1250 on the whatever so far. We don't know what product you're trading. And sometimes it's helpful, folks, if you're let us know what product. Sawan, 836 is still short. Okay, cool. I mean, I was short from 33s on an okay entry. I wouldn't say it's that great, but your 36s is a better entry. You got 10 handles in it right now. And counting. All right, John Hoagland.
Yes, sir.
We are below the opening range, 836. Does that not matter anymore?
Well, 836 is the high of the opening range. When you said that, we were in the opening range. We're below it now.
Yes, we're below it now. So
yes.
it's selling strength has made more sense than getting long so far.
So here's the 5-minute chart, Michael. You can see the low of the opening range right here. It looks like 18.5.
There's your sell-off. There's the floor removed from the NASDAQ from both.
Yep, we just coming into session low here.
Mm-hmm. So I built the cushion, folks. I know some of you are probably still holding on to your position. That's great. To each his own. I wanted to build a cushion. I like W's, and this is
Michael. That was a question in group coaching yesterday. What is a cushion? Why do you do it? Can you kind of go over your thought process of why you like to build a cushion, what it does to your mental capacity, your mental capital, if you will? Why do you like to put in that cushion?
Well, you know what? Like, each trade's about $300 I risk. So I like to have a couple winners out of the gate, and that builds that cushion that then establishes a little bit of. I think I'm seeing the pitches today pretty good. Baseball analogy. So it allows me again to get my confidence is right there. I'm not cocky. It's like two trades. You know, okay, cool. I'm reading it. And then I can kind of size up a little bit. Now I got like 600, let's just say, in the account, 2 winning trades. Then I start adding to the position the next time I get in. And as you build momentum on seeing the markets properly, you'll then start to notice, again, your P&L goes from 600 to 1,800 to 2,300 to 3,000. And you're like, oh, shit, that's a great day. There are times where I will keep increasing my size and then put up a $10,000 day or something like that. But I'm not seeking those out. Those are more base hits. Got the bases full, grand slam. Not always happens, but yeah, I mean that I like playing the rhythm in the price action. I like talking to John about volume profile, volume at prices.
You know, you mentioned a cushion, and it's like if you've ever been to the circus, it's like watching the guy in a tightrope, and there's no net underneath him. I'm like, oh my God. You know, but when you see that, it's a safety net in case you do have some bad trades. Yeah. And that's a smart way to do it. You know, start off the day small and build up that cushion.
Right, Eddie? I mean, so I have a cushion, but some of you guys are short still. So you're really, you haven't taken much heat at all. The folks that are up there in the 20s and 30s. And then now you're getting paid for being patient, letting this market play out. I don't know if you guys had listened. John had talked about selling strength.
Yeah, and look at where we found our best entry.
Oh, what's that
afternoon pullback yesterday. Afternoon pullback low. High of the session today. Do we know that? We don't. No, we don't know anything. We're currently at yesterday's session low. We were looking for opportunity to sell strength.
Yes.
We had a nuance that said we're rejecting higher pricing, finding that good level with which to get that opportunity. Michael, when you were talking about your building a cushion, is there ever a situation, and I'm sure you have had situations where you said, you know what, this trade might be an all-day sucker?
Yeah. When I'm reading the markets pretty well, there's going to be ones that, of course, I'll size up, and then I'll get 10, 15 handles in to take. Let's just say I have 5. Let's just say I have 6 on. I'll take 2, and then another 2, and then ride a 2,
and then let 2 go.
Yeah, and you could put up a $2,000 a day like that, doing that. Now, that's when I'm seeing it well, and I have a cushion. Now, the reason why I'm saying that is because if I'm not seeing it well and I still play that game, I'm down 2,000 quickly. So it's just a matter of account management and risk management and just being patient, waiting for great entries. But then also letting some of these trades play out. Now, I've gotten out of these trades, a couple of them fairly early. So, I would like to be letting them play out a little longer, and I haven't, but it's totally fine.
It's difficult when you have risk on. Time slows. It seems like you're in the position for 5 hours, and it's been 5 minutes.
Right. I know.
Hey, John, Elevate's asking, what levels are we looking at on the NQ below 14,800?
On the NQ below 14,000?
Brian Milquicken, while John's looking, new drinking game. Every time they use a bad analogy, drink a shot. You guys are going to be hammered. I'll play that game. I'll watch it.
Drinking games, they're like baseball. You just got to get one little drink, then another one, and then you're ripping drunk.
Well, I mean, it sounds like an alcoholic, Jack, but hey.
It was a bad analogy. Anyway, I wanted to make an announcement. They've informed me you can't make comments on a live video. YouTube's fun that way. So what we'll do is, and I would regret saying this because I'm going to do a lot of searching through these, post something you've learned in the live chat at some point during the day today. After the stream, I will make the random picks and we'll announce them tomorrow for 5 50K combines.
I mean, this sounds like a sloppy way to win, but let's do it.
As long as we got winners.
Yeah. If you send a carrier pigeon and it eventually makes it to my house, 62% short.
Later.
Yeah, 62% short in the S&P. Nothing. That's nothing really, guys. 55% short of the NASDAQ. That's nothing really, guys. But they're leaning more short down here. Tilt is about 60-40 to the short side. ICT, I was looking at the 610s too on a sell the strength type of play here. Sell the strength type of play. Because my contrarian down there was like, maybe I should start looking at what a good level is for getting long. But we're still playing out this sell the strength. I don't know why I would want to change that, but I thought about it.
5 minutes remaining.
All right, coming up to the top of the hour, we got some numbers.
We had was that question really? What levels are we looking at below 14,000?
Yes,
14,800.
Yes, it was, John.
It was 14,800.
Yeah, 14. No.
Yeah.
14,800. Yes, correct.
Oh, okay. So
Well, 810. Anything below 810, like sell the strength. If there's now, I'm not doing anything right now because there is and everybody there's a number coming out. Eddie, can you explain what's coming out?
All right, what we do have coming out here in top of the hour in about 4 minutes, we got our consumer confidence, prior 106.1, expectation 105.5, and we've got our new home sales for August, prior 714,000, expectation 700,000.
Okay, 700,000. We got a lot of learned in here. I learned to take my time with entries, especially on minis. Sahil, awesome. I learned about tilt and the patience. It's educational just to watch you guys interact. Agento, that's awesome. Eddie, there's other ones in here. I'll let you take over that. I got to focus.
back to that question, below 14,800, I see space to 14,610.
I spy what?
Not a lot's going
14.
on here.
What was it?
Below here,
Yeah.
there's space down to 14,610 weekly kickoff low.
14,610. Hey, you never know. What's the daily look like? Let's pull back. You are.
Here it is.
All right, guys, we're pulling back to outside of the Earth. We're in a satellite space station. We're in space station right now, looking down.
Space
Force. Planet Nasdaq, and trying to get an understanding. And then we kind of now get a little bit closer. We go to like daily, hourly, 30-minute. So, John, what's this? We got a big red sell-off bar forming today.
Yes.
Now it's trying to extend past yesterday's low.
Mm-hmm.
Just I'm looking at this, and it's already extended to past prior day from yesterday's low and the day before that. And yesterday did a college try on making new lows. It couldn't do that. So your body is open and close or above your open, of course, which makes it a green bar. Blah blah blah.
Mm-hmm.
Now we got a big sell off. 3 minutes. We have what's coming out in 3 minutes.
We got housing, and we've got consumer confidence.
Yep.
Okay, these are big numbers.
Yeah, I mean, if I don't see any support here for a lot.
We don't see very much support for a lot. We were talking about selling strength. The Fed had talked about the another rate hike, correct? Happening.
Okay. And we're facing a government shutdown.
And the government, U.S. government, may be shutting down. Okay, cool.
Right.
Nah, that's no biggie.
A lot of uncertainties.
Now you got some new data hitting the market right now. Let it digest. Coming out in a minute and a halfer. Ghost just smashed the like. Hey, why you guys got that minute and a halfer? Because I wouldn't recommend trading right now. I would let it digest. Smash that like button, right?
Smash it. Hit it. Let's get that number up today. Yesterday was a little low, and we all cried ourselves to sleep about that yesterday.
Remember, it's lucky.
It is lucky.
It's lucky.
You're lucky to hit the like button. I'll take luck anywhere I can.
Karma. Kudos. All right.
Smashed Paul Revere.
We are inside a minute here. We're going to find out how confident our consumers are.
Damn it, Doug! You broke our like button.
You broke it.
Damn it!
We need a new like button. That's a good thing. That's a good problem to have.
Can we replace it with a love button, please?
It's got to change the thumbs up to a heart. Okay, thinned out. Look at how thin it's getting. It's getting very thin.
We got the Richmond out here right now. Richmond Manufacturing Index, light number, coming in a little bit lower than expected.
Here's the thinness. Be very careful. No gamblers in the game of trading. That's a short-lived business, short-lived career, I should say. Don't gamble.
What was that number that used to come out to where if you paid money, you get it earlier? What was that number? Remember
that was Michigan,
Kingsbury or something, or.
But we got to ask Andre that. He was the one that was always
all
looking
right.
at that.
Here we go. Consumer confidence coming in at 103, lower than expected. New home sales much lower, at 675,000. They were looking at 700 prior, 739, 675,000. Mucho lower.
You show me a rally to ICT 7 or 810, and you might get a third person Michael getting short up there. Sell strength. Okay. So far, sell strength, but guys, anything can change now that there's new information in the markets. Algos and bots are turning themselves back on. They're processing what's going on. Big money's hearing this information. Institutions are hearing this information. Hedge fund managers are hearing this information. They all are sitting there. You know the ones running these big. They're right there. This in their ear. I don't know about TopstepTV. That'd be awesome. But with this information, this news in their ear. Right. Oh, ICT said 610. I thought he said 810. Anything below it?
No, he likes that 610 weekly kickoff low, I think.
Oh, okay. Well, I heard 810.
Oh. Got the fire trucks coming in here right now.
Where's my ride?
Let's kick it in for a hot streak.
ICT
hot streak.
ICT, you better be proud. I would be so proud of myself.
11 days.
Yeah.
11 days total profits here. 2,335 on the 50K. Nice.
That is Chipper Jones just base hitting it away. I love it.
I think we talked about that yesterday. Chipper Jones had nearly 500 home runs. So you're looking for the base hit guy.
I watched him towards the end of his career. He was hitting a lot of base hits. I don't know if he had the deep ball still in him.
And oh my goodness, thunder! You hear that? Ooh. Cesarline. I hope I said that right. 50K, 9 days. It's got a little gap there between Cameron and Cesarline. At 2009-08, Fred D. Oh, could that be our good old Detective Decker? It might be. The 50K with 9 days, 5,098. That's a nice profit. Stephen L. 50K, 9 days, tied with Cesarline, Fred, and Stephen, and Luis, 9 days, 2,156.
I love this.
There you go. There is our hot streak for your viewing pleasure.
There's my ride again.
Love that. I love it. These are what I like. Honestly, I like that type of trading. Swear to God, I've been doing this since 13 years. We've watched thousands and thousands and thousands of traders. And we've also watched thousands of traders blow up accounts in a twofold, good and bad way. Blow it up as far as huge profits, and then blow it up right after that because of whatever they're looking for that didn't pan out, that blew up the account. Base hitters, there's your analogy, take a shot. Take a shot of water. I'm with you. Here we go. Okay, so base hitters that win ball games, they win trading days. They win trading days, and they win trading days, and they win trading days. And you just get in this zone where you're like, I can put up 200. I can put up 200. And then you start to do that consistently, and now you're like, hey, I can put up 500. You can confidently go into the trading day knowing the fact that you're a $300 a day base hitter. Like you can get on. That's just been. And of course, you're going to have losing days, but you're not going to let them get away from you because you want to keep your average high. Your average is also really defining who you are. When you look at that person in the mirror and you say, can I trade? Well, if you have a negative daily P&L, you got to get that to 0 daily P&L, and now you're a scratch trader. And then you can probably look at yourself and say, I'm getting there. We're on our lows of the day right now, S&P.
Yeah, you've been talking. I was going to show you this, but look, we've got a distribution of volume, low volume node, a distribution of volume. Look where the market went to. The low the volume shoulder from high to low That's where it stopped, and now it continues to go. I could be a poet.
John, we need prices, and I'm just because I can't read that, and I'm not always looking, and I don't think a lot of folks are always looking.
The volume shoulder that was a nice opportunity for a short here. In hindsight, 14,786.
Okay, yeah, it did get up there,
right up to that low volume shoulder. That volume, I call them the space between a high volume node and a low volume node. I call them shoulders. So this shoulder here was a nice spot to look for a short. If you're looking for continuation, up against low volume nodes can be a good opportunity for you to try and get into it. I've historically been absolutely horrible at getting into moves that are already underway, but that's one way I've found a degree of success in doing so.
Really?
Yes. You know what? We've got nearly 1,000 people watching right now, and only 363 likes. I wonder what happened. I mean, Michael, take your shirt off. Maybe we'll get some more likes.
Just got stopped out.
No. I'm serious. I'm dead serious. Mike.
82s. Yeah. All right, that one I got short down there, and it did this little run up, and now it's back up here. What John was just talking about.
You gotta wait for the good trade location.
Continuing. I know.
You went looking for a trade. That's what happens.
I went looking for a trade, and I gave away my day because I had 2 on. I went looking for a trade. We were talking about 86s. It had just come off of that. It had not found any strength yet. It was down on its lows. It did a pop up of 5, 7, 10, and I'm like, okay, well, if the 10 handle moves off these levels that are it's trading at, and then I like it to continue. It's usually that's where it's doing its dance. So, I covered 82s, and that's a crappy cover. But that's because I had a bad entry.
We were looking to go short there. That's what happens when you have a bad entry. You end up putting your stop where you should get in.
100,000%.
It happens so much, and it still happens to me. I'm not complaining.
Yep.
But this being patient, looking for that opportunity to trade as close to risk as possible pays off.
Yeah, Danny says, don't go looking for entries because you'll find them. It probably won't be fruitful.
That's right. Right.
And everybody likes fruit.
50-50 on the tilt. 50-50 on the tilt. We haven't had big leans this week, except yesterday it was 80%, and those longs all got paid if they got out or if they got out in a short time frame.
Daniel Anderson's got a question. How do you guys limit risk? Do you always look for 3-to-1s, 2-to-1s with the same tick number for your stops? Or do you just look at an area you don't want the price to pass?
Michael and I differ on this a little bit. Michael, you go first.
I'm looking at the charts. You go first.
All right.
Not it.
So
Tag, you're it.
So I'm looking at risk from a technical standpoint. If price goes to here, I'm probably wrong. That's how I'm looking at it. I don't use a static stop. Let's look at here's the S&Ps. Okay. So I mentioned in directional moves, I use low volume nodes for support or resistance. This is a directional move to the downside. This would be an area of low volume. If price comes down here, starts to build volume and gives me an opportunity up against this low volume node, that limits my risk. I can get in on this shoulder and put my risk maybe on the other side of this little high volume node here. So my risk is 44 to 47, 3 points of risk. Maybe that's pretty tight for S&Ps. I might give it a little bit more than that, but that's how I'm limiting risk. So, if I'm looking for an opportunity at a lower extreme, if I were to buy this market, which I don't think there's any way in heck that I am going to buy this market today, I'm going to try and get as close to the bottom of the range to get into that trade so I can limit my risk. You also have to look out for, sometimes if there's an obvious trade, the market is going to seek the stops from the short time frame traders who took those trades. So you're going to want to try and get in where those stops are. There's a whole kind of mental checklist, I guess, that I go through to look for opportunities where I can limit risk. But I'm a big fan of cheap trades. I want the trades to be cheap. I don't want to have to pay a lot to find out I'm wrong. So when I'm looking at an area that I'm looking to hold as resistance, I'm going to be as close to that level as I can, and my risk is going to be on the other side where the market is telling me where I could be possibly wrong. So if I'm going to be looking for a trade like this and I'm risking 4 points, I'm expecting reasonably and probably at least 8 points of risk. I'm a 2-to-1 trader or more. Now, if I did take this, but we've been gabbing so much, if I did take this trade, I wouldn't have a profit target in right now. I would be looking for this market to continue this push lower because, well, we've been talking about selling strength all day or for the last week, right? We've been talking about selling strength. We sold strength. It looks like the market is, at least in the NASDAQ now, we've taken out yesterday's low. We got nothing but space down below that all the way to that 46.10 level. Maybe it'll happen. Maybe it won't. But that's kind of how I look at risk.
Hey, Hoag, I got a stat that I think you're going to like. And it ties in so perfectly to what you just said.
Cool.
For all the funded traders last week, the average winning trade was 290, average losing 158 for a 1.8 to 1 reward to risk.
See,
when I was in the pits and when I was trading really actively, I was always 1.7 to 1. Now, I've always heard in futures, and you can look it up, futures 2 to 1 is a recommended risk to reward. I don't know why futures, but I remember reading that, and it could have been just a guy recommending that in a book or in a thing, but they had a bunch of data around it. So awesome. I love this.
Here's a question out of our YouTube. It goes for everybody now. Tyler's asking, it looks like he's a Steeler fan, what is a good time, if any, to quit your day job? As soon as you get funded, or wait till you have a stack built up?
Ladder. The ladder.
Yes,
Ladder. And guys, just so you know, I always remember former and ladder. Former first, FF, ladder last. That's what I always remember. Please do not. And this is this is advice now, not even shared experience. Well, it is shared experience because I didn't quit my day job.
Gather around.
Gather around. Just please don't quit any day job. Do not kill an income stream. It's so valuable to have an income stream to get yourself into that sweet spot, and you have to put up a stack. For your own sanity, so you're not mortgages coming up, rent's coming up, this and that's coming up, and you don't have pressure because you need to plan your life in a way that you have an income that's going to cover a lot of these things like food, shelter, all these things that you do not want that pressure on you. That pressure comes on you. It is so damn hard to trade. So,
yeah, you don't want to trade because you need the money,
right?
No. I don't think that there's any futures trader that I've ever known that didn't have something else going on the side just to try and build money, build equity, build wealth, whatever it is, whether it's a job tending bar or whether it's investing in real estate or whether it's opening another company. They're always looking to diversify their income streams, and you don't want to give up an income stream until you've got another one going. Let's put it that way.
You got
another stable one.
We got new lows coming in here, but until you get another one going for a consistent amount of time, put up a good stack. When I say stack, man, you $100,000, and I'm going to say that like $10,000. No, you can't quit a job on $10,000.
You need a stick.
A stick, $1 billion.
Be more comfortable then, wouldn't you?
100,000%, 1,000,000%.
Either that or find a significant other with a good job.
There you go.
That really loves you.
Yes. All right, we're making new lows. Selling strength would have even been another great play. Again. And it had gone up to 75. but I'm just looking at a 5 minute now just to see where it was at 5 minutes ago. 77-ish, 84-ish, the 5 minute prior. Are you still selling strength, John?
Absolutely.
Okay.
Absolutely. Until the market says something else. Look at this daily.
Yeah, I know. Slip and slide.
We're below all the moving averages. Well, almost the 200 sessions all the way down here. There's nothing but space. There's nothing but space between here and the weekly kickoff low, 46.10. I'm sorry, 14.610.
Okay, I got nothing on the tilt. 62% shorts. I mean, they're a little bit heavier on the short side, but it's like 60-40. Nothing to brag about. Trend is your friend, Rick Hoagland, for sure.
Hey, I'm looking down the road here today, and don't forget, we're going to be having our power players, Hoag and KV, one of our funded traders, going to share his journey. And then we got group coaching with Coach Robert. The stat guy. So lots going on here today coming up. So crude, we're going to be talking shop, shoulder tap, top quiz. And Jack, you want to sort of come in here again and explain what we're doing?
Yes, Eddie, I would be happy to do that. So today during Top Quiz, the winners will win the normal prizes, but we will choose 5 random quiz takers to win 50K combines. And then we are choosing 5 from the chat. If you type in something that you learned, and probably put the word learn in it, might help me at the end of it. And we'll announce those tomorrow at the beginning of Fast Money.
Wow.
Fast Markets. We're not CNBC.
It's like a game show,
Yeah.
like a giveaway.
We're doing that because we sent out an email. I was informed of this just yesterday morning by Danielle, but we're giving away 10 a day this week.
Wow.
So limited time.
Did she put all the combines underneath everybody's seat in the audience?
Everybody gets one.
Yeah, that would be sick. No, I just learned it after I started the stream yesterday. I was like, well, let's figure something out.
That'll work, though. That's good. So cool.
Yeah.
Yep, indeed.
So we got a pretty good directional move here. Hey, Rick, it's good to see you. My Randolph to my Mortimer.
Yeah, your brother.
I love you, buddy. So here we are.
I have so much FOMO going on right now.
I'm sure you do.
Ghost, you said that. I have it too.
I'm sure you do.
And then I'm thinking about yesterday, how hard yesterday was to get out of the hole. And then I'm thinking about today that I just put myself in the hole $200, and I was up 6-5, whatever, a good cushion. So I got to be patient. I'm going to put it on when I see if I'm not going to be looking for a trade, and I'm not going to be hesitant when it sets up.
You said that last time.
I love it, Johnny. Thank you.
You know how we're asking traders what they have learned? Well, I think Ludwig says, I learned that Patak is awesome. Quick, give that man a combine.
I think that's skipping your way to the front of the line right there.
Yep. VIP coming through out of my way.
Right. And it is PATAK, but yes, I appreciate that. Thank you. You're awesome as well for being here and us trading together. All of us.
We got a poll going on. Do you feel that tuning and finding Topstep in your backyard, do you feel that tuning into TopstepTV has helped improve your trading? We would love for everybody to put a vote in that one. If not, we're back at the local burger joint flipping burgers.
Hey, Eddie, we're not supposed to quit our day job. Remember that?
I'm about to. I think soak my bedroom floor here. I got a nice rainstorm. If you guys will forgive me, I got to step away for 1 minute to go close a couple of windows.
Oh my goodness! Yeah, we got one here too.
The weather is gnarly in Chicago right now.
I'm seeing blue skies, bluebird, great hiking and downhill biking day, mountain biking. I'm looking out there, golf even.
Just pour that lemon juice in. Yeah, pour that lemon juice into my open wound. Go ahead. Go ahead.
Oh, I'm looking for a trade that cannot be found. Well, can be found if I keep looking. Then you can talk yourself into, oh, well, it just set up. Or you can start perceiving things that don't exist. Kind of like you're walking through the desert and you're looking for water. And next thing you start seeing
what
you think is water. And an oasis.
You see like a Motel 6. Hey.
Well, as long as Hoag's away here, we've had James out scraping some of the social media, and we just wanted to give a shout out to Pippi Banks, who was funded it. Posted their certificate.
Oh, it sounds like they're Albert King to be exact, but that is awesome. I love it when people post, and definitely upload or update your LinkedIn now, so then you can show that you have risk management. You've demonstrated risk management skills. Yeah, it wasn't for like 4 years of college, but like you have this that you can. If you're in the, I've always wanted to be in the financial space, and I always put my experience on my resume, but my resume only went to a prop firm that then hired me. I think that was my only real job next to that a hospital job for like 3 months. But I've been trading since I was 18, and I always wanted to show that I had this experience. And I did like an online trading academy class, so I was like, oh, I can read technical. Put it on there. But this is important if you're talking to somebody, you're getting interviewed, and say, oh yeah, I've traded the S&Ps, back last month or for last 6 months. This is what I'm doing and how I'm managing risk. I've been I've got a certificate over at Topstep, and Topstep is one of the top prop firms, and they are looking for people who can manage risk. They do not put you on a funded account if you can't prove that. So that's just a night. Okay, and then they'll ask, "What's Topstep?" And then you'll talk to them, and then you have a talking point. It's a talking point. How about that? It's a talking point in your interview that's not going to hurt you.
Right. Patricia, if I made $14.57 yesterday and then $1,600 today, I will have to trade a third day tomorrow. No, you don't. You trade when you want. Trade if you see opportunity. If there's opportunity tomorrow, sure. I've always told traders, hey, if you've got some good days ahead, good days behind you, don't be in a hurry to give that money back. Be frugal. Be humble. Look for the best opportunity. So you've got, Patricia, to have 2 very nice days in a row here, and only if you see opportunity.
John Jones, what's my thoughts on Online Trading Academy? It was it was okay in 1999 when I went to it, or 2000. But I would never pay $2,800 that I paid for a technical analysis class, because like they didn't have YouTube then, so you couldn't get all that free stuff. They didn't even trade. They didn't even put on trades in the class. And then they started selling franchises, which, don't get me wrong, like being around other traders is great. Michael Hurton, you're kind of cheating your way. I learned that MP went to OTA. I just said that. Jack, we got Michael Hurton jumping in here with an easy win on what he learned.
You want to draw him, Michael?
No. You're building that list right now.
Hey, Gordy D's asking, is there a Chicago trading group somewhere to join? Go to our Discord channel. I mean, there's a lot of traders here in Chicago. You can meet up with. You could, find a place that's got some Wi-Fi. Bring your laptop and sip on a $12 coffee. But get together. That's what it's about. Join our Discord. James, if you're listening, or JD, can we post that Discord link in for those that don't know anything or don't know about our Discord channel and would like to join? Lots of channels, specific channels that you can join and get some trading buddies, some information, share information, and so forth.
Yeah.
Good stuff.
Patricia, in 1999, I was older than 7. I am 44 right now, so I think I was like 18 or 19.
You know, on the trading floor, they would once a year, they would have like, what is it? Bring your child to work day, and they would actually have trading coats for these kids, and they would trade pizza futures on the trading floor. And
Get out of here! That's a cool idea.
Yeah, and then after they would be done trading, obviously they would have a big pizza party for the kids.
It was so fun to watch too, because they taught these kids the basics of supply and demand. So they would open the market, and then they would announce that there was a cheese shortage. And that was going to cause the price of pizza to go higher. So all these kids are all trying to buy it. And then they'd say,
who's selling it? Who's selling it, John? Or is it like
there were traders in there that were helping facilitate trade for these kids. There were market makers in there, if you will.
Yeah, it was really great when they got in fights, and you know it was great. You know, kids would start arguing and kicking, and you know, and then they
weren't.
Pizza.
They were kids.
The locals in the other pit came in there and just stuffed them with a bunch of sell orders.
Well, then they'd announce that the pizza shortage is over, and all the kids would turn around and trying to sell it. It was like watching Trading Places.
I mean,
Mixture 7 says, does Eddie trade? Seems to be only John and MP. Well, I trade S&P. We've got somebody trading S&P. I traded NASDAQ. We've got somebody trading NASDAQ. I used to trade crude. Danny trades crude. So I'm learning gold. So give me some time. I'm not going to jump in a market that I'm not familiar with. I'm playing it cool like a jewel. So
here's a look at it now, Eddie.
Yeah. Eddie's like being in recess and getting picked last. Now, I guess after everybody,
the fat kid,
trade gold.
Fat kid, but that's my football.
There's the 5 minute for you, Eddie. We're really kind of centering around that weekly kickoff level.
Yeah, I like that double on the 30 minute. I mean, I'm not going to say it, but you know, people be like, "Oh yeah, right, sure, you could say it now." But I would have probably been a buyer at that point.
We got Danny waiting in the wings.
Do we?
Ready for him.
Oh,
yeah.
Sorry.
Johnny, what levels are up here real quick?
All right, hang on a second. Back to the NASDAQ. And so, all right, we're directional. So what I'm looking for are opportunities against low volume nodes. Here's a low volume node. So that's 49 up to 64.
49 up to 64.
Now I want the market to stay below that, and it does allow me to limit risk.
Okay.
We've got 1, 2, 3 areas of consolidation. What is it? Distribution of volume. You know, I would probably prefer to try and get the highest low volume node for the next opportunity for a short.
Which is around 69.
That is up here back with the last spot was 85, 84, 85. But think about this, Michael. There are other people that are thinking the same way we are.
Yes, I know. That's what I was just thinking. 80.
So if I were to be looking for a short up here, I want to catch where the stops are above the B high, because we're about to open C period. We're about to open the third 30-minute period here, and less than a minute here. So let's let this open up.
Okay.
Okay,
we're going to let that open up.
Stops.
All right.
All right. We got things to do.
I recommend if you're trading crude, stay glued, because if you're in the mood, we got Danny coming up here. Be right back. Hey, Danny. Welcome
Morning.
back. I missed you yesterday, partner.
Yeah, yesterday I had to take a little me day.
That's good to do, Danny. It's good to do. Done it.
Sometimes needed.
What do you stand for, Danny?
Well, I stand pissed off right now.
Uh-oh.
Let me guess. You took a loss.
I did. I this morning at what time was it? About 8:30, little after the open. I liked where the market was trading. Market was trading just above settlement price at 8:36 this morning. We were just above settlement price. I liked that. I started seeing this market starting to slowly tick higher. I saw volume coming in. So I wanted to see if we could get that market to extend higher. So I bought this morning at, what did I buy? 39s. No. 69s, just above settlement price. I bought 69s thinking, here we go. We're going to see some acceleration through settlement price. Well, we had a little bit of a pullback, and it came and tagged me out down at 39s. I took a 30 tick loss on a 3 lot, so I lost a good $900 there, just in time for it to start to rally, because I was looking for this thing to extend into yesterday's range and potentially towards the high side of yesterday's range. So unfortunately missed out on that, and that's what happens when I come in a little anxious, I guess. Came in a little excited.
Pullback, wasn't it?
Huh?
It was a pretty vicious pullback down.
It was a really vicious pullback, and I thought I was all right. Like, I put my stop down there at 39s. I was like, if we get down by 39, this market's not accepting above settlement price. That's what I was looking for, and here we go. There's the move. Would have liked to have been in that, but unfortunately missed out. There's 40 ticks in it. So, oh well, we missed out, and we live to trade another day.
Ooh, I like that line. Who taught you that one?
Yeah.
No, I'm always trade for tomorrow, John. Who taught you live to trade another day, Danny?
I think it was my dad, probably. I don't know. Most of my cliches, my trading cliches, come from my dad. I had to learn. That was the thing growing up with my dad and all of his brothers being traders. It was either learn the trading lingo or like go hang out with my mom and aunts while they were talking about their thing. And that one didn't excite me as much as like hanging with the men.
Uh-huh.
And so I used to like listen to my dad and his brothers talk when they get together. And I'd come home and like I'd make some notes. I'd come home the next day, be like, hey, Dad, what is a straddle versus a strangle? What is a long? What is a short? Puts and calls. Like I would ask him all these questions. He's like, what are you asking me this for? I'm like, I'm just trying to understand. I heard you guys talk about it yesterday, so that I could eventually start to understand their conversations as I got older.
You had a lot of just multi-generational family wisdom to help you get into this, didn't you?
Yeah, he did.
Yeah, it started with
Fantastic.
my grandpa, my uncle, then my dad, then 2 more uncles went into it. Then I went into. My dad always said, "You don't want to get into this industry." And I was a kid growing up. I was like, "Nah, I don't want to do anything like my dad." And here I am. I'm the one doing the closest thing related to him. Funny how life works out.
Yeah, I was lucky to have a dad in the industry. My brother Rick is talking about that right now. It's a wealth of wisdom and knowledge. And my brother was in the industry, still trading actively. Even my dad's dad was somewhat related to trading. I mean, he was kind of a cash grain trader, but out in Iowa, Nebraska, and so that goes back to the early days of the Duke brothers.
Damn, this thing's going. Well, I think that's, just looking at crude here really quick, I do want to mention it. Last week, we had a lot of information that came out, a lot of information that said this market should be pushing higher. We haven't. I do want to point out that the high side right now, I was looking at the last few days, we have been inside a range with the low being just above $89, probably about at $89.30. And I'm looking at 90.50 to the high side here. So really 90.50 is that next area personally that I'm going to be looking for to see if we have any reaction. One thing I will do is when I'm looking at a price point or a level, I'm paying attention to two factors, volume and time. How much time is spent at that price, right? We get a lot of action at levels in the overnight session. Maybe it doesn't bring in a ton of volume, but that time spent there, people are keeping an eye on it. And then that volume is the most important thing to me. So that 90-50 is that next place I'm looking at.
90-50s, wow. Yeah, so you said spending time at a level, right?
I like watching how a market reacts around a level. Tells me a couple things, but I think, John's got a good saying when he talks about the auction process. When a market spends time at a certain area, right? When we say a level, it's not finite. There's an area to it, right?
Yeah.
But if the market's spending time sitting there, it's telling me this is a fair value. And it's going to take something big to move it from this price point. So that's what I'm looking for when I see time spent. That's one of the expectations, the beliefs I have. Otherwise, the other one is, no one's trading right now. Nothing's happening. So that's why I like this price maybe. But for me, a lot of it has to do, this seems to be relatively fair value. And this weekend I went and looked at new trucks. I'm trying to get something a little bit more economical.
Get an EV.
I looked at a diesel.
I mean,
decided not to. Sticking with old Betty.
Yeah, stick with that. I don't know if you need a diesel. You guys ever seen the videos of those guys that change their diesel pickups so they blow all that black smoke?
Yeah.
It's called rolling coal.
It's like rolling
more
coal.
Fuel, more air.
Don't get me wrong. There's quite a few of those out here in Colorado, and there's nothing more that pisses me off. Well, there's a lot more that pisses me off. It's just like, dude, thanks for like polluting the planet, like hardcore.
Mr. EV.
I mean, just still, I kind of want to take care of the planet. I got 3 kids. I mean,
I'm just yanking your chain.
The whole world runs on diesel.
Ain't that the truth? Well, I got nothing more to add here when it comes to crude oil. For me, I made a trade off the gate, took a loser, down $900. Probably going to sit on my hands the rest of today. That was a nice little reality check for trading a little bit more on my first day back this week. I didn't look at anything yesterday. I pretty much turned the phone off yesterday. It was really good. So today, normally I would say sit out your first day. I liked where the market traded. I was looking for acceleration through settlement price. I did not get it. That's on me. I should have been sitting on my hands. I should have recognized initially that it was struggling once I got in the market, and I should have got out. But we were still holding above settles, and once we dipped below, I said, well, I have a stop in place for a reason. Let's see if it makes it there. And it did. It took me out. Now, price I pay until we see what tomorrow brings.
You got JT talking about, what about the 91 levels for short?
I mean, if that's something you like, yeah, for sure. Here's the thing for me, JT. I don't want to sit here and say at 91, this is what I want to do or I'm going to do. There's so many things that can change. The first thing is, 91 is an area I'm going to pay attention to, no doubt about it. If the market gets to 91, let's pay attention to what's going on. First off, what time of the day is it approaching at 91? Is it 8:30, 9 o'clock in the morning? Hey, maybe we're going to see something big happen. Is it 2 o'clock in the afternoon? Maybe I'm not going to do a whole lot.
Right.
What kind of volume's coming in as we approach that price? Are we seeing volume? I say this one all the time, but basic principles of volume. If the volume continues to come in, look for price to continue in that direction. If volume is starting to slow, look for price to stop or potentially reverse. So there's a lot of things I got to factor in as market approaches 91. Yes, total price, pay attention to it. Big fat round number, BFRN, very standard industry term there. Mm-hmm. Look for something, but don't have an expectation of what you're going to do now when the price gets there.
Thanks, Danny, because we need to talk crude. NASDAQ. John, tilt right now, Zeke trades. 68%. 68% are long.
Yeah.
John, there are some short levels, or there's some levels up here that you talked about.
85. But I want to hit the stops above 85 before looking for a short.
Okay. Then
Now, we do run the risk, my good friend, of not getting to those stops. So this whole zone here is kind of an entry zone.
I'm selling. I'm looking to get short the strength right here.
Mm-hmm. Okay, yeah. I mean, I don't hate it, but remember, I mean, this is it's kind of a visual where you may run into a lot of other short time frame traders holding their stops above 87 to 90, 87 to 90. You might see a bunch of stops there. Just be aware of that.
Okay, I like it. Not yet. On a patient way.
Not yet.
Not yet. 70% of folks are 70% of folks are long in the Nasdaq. The bat phone.
It's Commissioner Gordon.
Well, the wife is the only one that has the
sound?
my chief of staff, the sound, the ringer on. Everybody else gets no ringer.
So Eric has a question here, and I'm sorry, I just wanted to. His question is, why not wait for weakness to short?
You're selling in the hole, aren't you?
Yeah, I mean, you sell the low, you can there can be any kind of pullback that's going to put you in under heat, if you will, and I'd rather look for opportunities to sell it on strength against resistance. Believe me, there are times when selling into a big move to the downside might be the right thing to do, but it's generally more risky. Very rarely is it, I think, the right thing to do to close your eyes and sell at the low. There's always a potential where that's going to be the right thing to do. But again, I find those very rare.
John, I think it's kind of stalling out up here. What's your thoughts?
I think it probably is too. So, what's that telling us? Well, we're running into some selling up here. If it's short time frame, their stops are going to be above this 86 level.
So run these because it's dancing around here. There's your stop.
There we go. Now we're running the stops. We just hit the stops.
I double clicked. So I'm short 3 right here.
Now where's your risk? You're sticking with 15, right?
Yep.
Hey, I got a question from Dan Trader. John, based on your experience, if the market is in a directional move like today is, there's a standard deviation level that will give you a pause on trading in the direction of the move?
So you're talking standard deviation from VWAP.
There's 198 at the offer, 200 at the offer at 87. Do you see that?
Yeah, that's a little liquidity. That's a little worrisome.
When you say worrisome, why is that?
Because the market's going to go to liquidity.
Yeah. Oh, take it out. It always takes stuff out. I'm short from 82.75, 3 lot. Taking a little bit of heat on it, but I like selling the strength up here. Down on the day, chopped up as hell. Look for a couple trades. I got my bat phone going off right now.
She's calling to tell you if she likes the trade or not.
Yeah, maybe this is you have Lucy, I have my wife, and 3 texts in a row means sell it and get your ass home.
Yeah, safely.
Huh. It's dancing right around here. My position hasn't been in the money since I put it on because I sold that rip higher, but the rip continued.
So lighten up if you're nervous.
Yeah.
Some guy's asking, can we explain a little how we identify we're running stops versus just picking up steam?
Good question.
It's always a hypothesis. Number one, we're never 100% sure about anything in trading. My thought was, if we're looking at this area for a potential short, others are as well.
Yep.
The algos, HFTs, they're going to sniff out where those stops are, and they're going to place orders to take the other side of those stops.
Speaking of stops, I'm right here up at my stop. The entry that I had was 82s, so my stop's 97s. And what kind of sucks about this is I've never been in the money since, there you go, stopped right at 97, 98.
I think we're still pretty much running some late stops here.
14s.
Eric has a question. Maybe, John, you can explain this. How do you know the percentage of longs and shorts on futures per day? And I think he's talking about the tilt.
Well, yeah, the tilt is it's an aggregate position number of traders that are in the Topstep trading combine and XFA accounts. So it's just a view of the overall sentiment of the traders here at Topstep.
What levels did we have up here? 36s, 836s.
Well, I mean, we're still in the low volume node here. We ran a whole bunch of stops here. We've got the initial balance is relatively large.
God bless her. I hate being wrong so many effing times. Stopped out.
And then it goes, right?
God.
Which is kind of the outcome we were looking for. I mean, we knew that there was going to be some shorts that were stuck getting out up here. The trade location, we were looking really to try and hit to sell into some of those stops, and a little bit better trade location, you'd still be in the trade.
Yeah, I'm so fucking. I'm pissed. All right.
Yeah, don't get pissed. You're all right. You're going to come out all right in the end. Maybe not today, but overall, you're going to be fine.
Now, here's a comment from Tyler, our Steelers fan. Michael, do you prefer the NQ to the Dow, even though that was where you started?
The Dow gets really, really thin, but I'm trading NQ because everybody at Topstep trades NQ. Those that are trading at Topstep, I would, and I was moved from Dow to S&P. But John does the S&P, so I didn't get picked on the S&P team, so I just chose the NASDAQ team.
You didn't get picked on what?
The S&P team. Going back to Eddie. Eddie didn't get picked until gold goes, all right, Eddie, come on over here. Oh, my God.
I'm trading pizza.
I'm upset. I'm upset.
Well, what do you do? I mean, if you're upset, practice what we preach. You got to take a few steps back, reevaluate. We're not here to fight. We're here to trade. And if we're fighting the markets, and that's something that we have to recognize before we dig that hole too deep.
And, we can always take a look back at this and say, okay, what did we do and what could we have done better? We were looking for a bunch of stops above the B high here, above 86. We had a couple of points of it. The market didn't pull back right away. It continued to bring in, buyers that are probably getting out of those positions that we kind of got in.
I know.
And then once we got up here, we didn't bring in a whole bunch more volume. This is still a low volume node. So, if we were a little bit more patient, got a little bit deeper into the pool of stops that we just ran, we probably could have stayed in, and we could have, been holding that position still.
Even if I got the high of that, or what the low volume node, is 91. I still would have been stopped out, even with that entry. Just no, I wouldn't have. But I mean, like 90s or 91, 15 handle stop takes us up to 05.
Right. So you kind of preempted the stops by getting short at 82.
And then you this is like setting up for sell off, but I'm very biased right now, so don't listen to what I'm saying. I'm emotional too, so don't listen to what I'm saying. If anything, fade me.
Well, don't be emotional. It's just a trade.
I know.
You know, it's easy to say.
Look at this sell off.
You know, it's easy to say.
Well, hopefully somebody else caught this, because that's where I get my joy. It will not come from my my order book with all my fills in it. It will not come from my order book with all the fills in it.
You know, in about 10 minutes, we're going to have Andre on here. Maybe we can sort of run this past him. You know, what would he suggest? So it's all about teamwork here.
Damn it. Look at this. 30 handles. 40 handles. I'm just like, I need to take a break. I'll be back.
Okay. All right. Well,
Johnny.
Yeah, go ahead, Eddie.
I was going to say, you know, we've got, I just want to give props to a lot of our listeners and people that are watching here, giving suggestions, you know, when you're having a bad day or even when you're having a good day. I mean, that was a little earlier, but the suggestions that they're putting out there. And, you know, props to everybody that can understand, you know, that what we're doing here.
Mm-hmm.
So, I mean, it all comes around full circle. I mean, whether it be good or bad. And the thing is, you know, you got to take a few steps back. You got to walk away for a bit.
Mm-hmm. And, you know, you're seeing a lot of folks in the chat just, you know, saying, hey, doing the right thing, just, you know, take a walk. It's all right. This is real. This is, you know, you got to take a breath, right? You start kind of filling your blood with venom, and that venom is only for yourself. It's not for anything else.
Right. You're just going to
gotta let it go. You got to find a way to let it go.
You know, I mean, and you know, John, you've talked to thousands of traders here at Topstep. I have, and that's when it seems to get to the point where emotions hijack your account, the revenge trading kicks in, and you know, you're already in a hole. So, you know, why dig that hole any deeper, hoping that next trade, maybe this next trade. But once you take that step back, reevaluate, and see if there's an opportunity. Maybe you're just sort of looking at something wrong and correct it. So, I mean, good stuff all the way around. Mm-hmm. It's like your brother says. Rick says, walk away, clear your head, purge your emotions, then relook your strategy.
Absolutely.
You know, I was going to say that's like when a pitcher gives up a home run ball, he doesn't get on the mound right away and pitch the next. He'll take a walk around, he'll think about it, close his eyes. You know, maybe the second baseman comes over and says, "Hey, don't worry about it. We got your back." You know, that's what it's about. You know, same thing here. You know, in trading, it's really cool that we're seeing such information getting shared.
Yes, it's kind of funny you said that about you get a pitcher giving up a home run. We used to tell the kids, you know, that when that happened to them, when I was coaching, I'm sure when you were coaching it too as well, Eddie. All right, just take a little walk around the mound a couple of times, breathe in and out, let it go, and then get started again. So
yeah,
you know, that venom, it just keeps you from thinking correctly or right, and it keeps you more closer to just making emotional moves and impulses in the marketplace. If once you let it go, then you can come back and take a deep breath, think about, okay, we just learned something from the market. We paid for a little bit of education. That's going to happen from time to time. Now we can calm down, reopen our eyes, step back, take a look at the next opportunity, and then react. You know, maybe to trade a little bit smaller, just try and get back on the right side of things.
Right. Well, getting back on maybe the right side of things, we're looking at crude right now. Crude's above the $90 level right now, 90.31 last, with a nice little run here with the bull. We'll see how far that can run.
Jack, I'm back.
All right.
MP, a lot of folks applauding your decision to walk away and let go of things and calm down a little bit. And as well as us, we're proud of you for doing that. And
I did 20 push-ups, went to the restroom, but I still have like this upset feeling in your chest. And then I just want to be right. So it's all that kind of like. And yesterday was a struggling. Like last week I did 3,200, but like that's a good week. Yesterday I spent the whole day to put up 75 when I was just struggling all day long. Who said that in here? Somebody else was talking about being down.
Double Sim said, happens to me all the time. I shut my PC off twice today. So
there you go.
Twice.
Brian Overcash down 1,700, got 700 back. Was down 2,200 yesterday. Worked back to $8. Do you know how $8 down? Do you know how hard it is? Brian, I love that. Those are great trading days. Sometimes I find more satisfaction in those days that you can bring it back to zero than I do like a day where you put up 1,000 or 2,000 or three. Well, three's always a good, but like $1,000 days, you're like, okay, yeah, I can do that. But yeah. It's working yourself out of a hole is difficult. The best thing to do is don't put yourself deeper in a hole, which that's why loss limits are there. And
yes, and even if you're nowhere near your daily loss limit, if you're making trading decisions or impulses that are putting you deeper in the hole, that's one thing. But if you're able to purge, like my brother says, purge that emotion, get back to your strategy, and your strategy doesn't provide good opportunities, that's one thing.
Uh-huh.
If you remember, Dr. Menaker talked about the hierarchy of decision making, and there's 4. The first 2 are within your strategy, and these are the best things that can happen in trading. You take a trade in your strategy and it pays you. Number 1, that's the best one. Number 2, you take a trade in your strategy and it's a loss. The real damage comes when you trade outside your strategy and it's a loss. But the worst one, the most damaging trade that you can take is taking a trade outside of your strategy that pays you, because it reinforces bad behavior.
DL, I just took your advice. 2 seconds, take a deep breath. Hold it 2 seconds.
Mm-hmm.
Then before I exhale, take a quick last breath and hold it for 10 seconds. So I was doing that while you were talking, John.
Those are the directions on my bong.
I needed that. Thank you. Oh, that feels good when you can laugh. There's tradertainment. That's why we wanted to do. If I was not talking to you guys, I would be fuming right now. And I go into meetings and talk
with that in your heart.
I wear my emotions on my sleeve. But what's wrong with you? I'm like, nothing. I'm fine. But I don't care what it is, guys. I've been trading for however long. If it's just to consistently yesterday, blah, 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 all wrong, and then caught a couple and then scratch today. Today had a cushion, which I felt okay about, but then every trade after that, and I looked for a trade that started it. You guys remember that?
Yeah.
How you said be patient, and then I looked for a trade. I got that wrong, gave away my day, even though you're like, well, you're only up $600. Well, yeah, that was my cushion. I was ready to take the next trade that I should have been waiting for very patiently. But no, the times that the point I was ready to get into the trade, I got in a little bit too soon, but I already had gave away my day. So then I'm now double.
Now a little bit of impulse getting into that trade early.
Yeah, I know. It's just, and then the market knows, of course, where it's going, and I don't know where it's going, but that's why entries are so damn important. So damn important.
Hey, if you like what you're hearing and you like the camaraderie we've got and like the suggestions from not just us, but from your fellow traders, hit that and smash that like button. We've got close to 1,000 people watching, and just only half are saying that, hey, they like what's going on. Smash that like button. We would honestly appreciate it. And if you're not subscribed, please do. Please subscribe.
Yeah, I'm
lots of good things going on here.
I am going to smash the like button.
Simon says, smash that like button. All right, we got Drake coming up here next in just a little bit, but like I said, let's bring him into the conversation. It's a good learning tool that we've got going on here right now, and I don't think we've talked about that since we've been on the air. You know, what do we do as a trader?
60,
How do we react?
60-40, sorry about that. 60-40 to the long side on both the sisters. Crude oil, 65% short. So really, that's been the MO or the quotes all day long, or what I'm seeing all day long. We haven't had a strong tilt one way or the other. And one way or the other is like 80% of people are biased to longs. Okay, watch it. Yesterday they got paid, but then right after they got paid, meaning like I felt like a majority of them, because it went from 80 down to 67, and then it went to 63. I remember this, and then the market just sold off. So that means any of those ones looking for the big move took it on the chin, possibly, unless they held it all day long and then the market firmed back up. But that's a long hold to hold yesterday.
Well, my friends, minute after the top of the hour, and we're going to be doing some talk shop here. Shop talk with Andre, and we'll be right back.
Hey! What are you...
All right. Machine Gun. How you doing, my friend?
Machine Gun.
Andre.
You're sticking with that, aren't you?
You know what, though? That's a badass nickname, man.
Machine Gun Kelly, right?
But I love you. I swear to God, man. You're just such a lovable guy.
Oh, I appreciate that.
And you bring so much to the table here. So, have you heard what we're talking about?
Yes. I've heard, I've seen.
And
been, quite entertaining, Michael. Not gonna lie.
Oh, I'm glad. Do I entertain you?
How bad is
I'm this gladiator all cut up.
Yeah. Hey, you're still walking though, man. You're still walking. How bad is it?
It's frustrating, and to get stopped out in certain areas. To do what my trading buddy goes: stay patient, wait for it to come to you. Don't seek out. I seeked out. I just did it. Stuff that was wrong because I was trying to predict when I should have just stayed patient and let it come to me.
I'm not gonna lie. I thought the market was gonna run lower too. You got stopped out being short, right?
Yeah, and I was selling strength, but that strength really was taking all those short time frame folks just like me and goes,
their stops.
Yeah, let me run your guys' stops because you guys are all the weak ones.
Yep. That's 2 days in a row we've seen stops go off. I mean, it's pretty cool. It's pretty cool to see it in the wild, as they say. So now we're going to sit here sideways, of course. And
in its natural habitat.
It's natural habitat for all of us to see. So go figure, the market's going to sit here and just trade sideways. So to dry up all the opportunity. But we'll see.
Of course.
Yeah, it'll drift lower and then I'll look back and say that was the worst stop run that I took.
Dude, so I got a question. Do you think you could have widened up your stops a little bit more? Or
no, I don't like doing that because then next thing you know, I'm changing. I'll try to be more patient than I am widening up stop like that. That was even from that. It would have still been like a 20 handle, like 83s. It was right there. Low nose started around the 90, right, John?
Yes.
Yeah.
That would have been 15 handles. Still, yeah, you could be like, hey, I can widen it up here. But like,
so it was 87 to 90 was the volume shoulder. We were kind of looking at where the stops were going to start.
Yeah.
We got more stops than we thought. But still, I mean, a better trade location. We got those first two handles right away in the stops, and we probably would have thought that, hey, maybe that's it.
Yeah.
But still, I mean, that would have been better trade location at 88 because that could have kept you in up to 06. That would have kept you in your 15 tick stop.
Yep.
Or 15 point stop, I should say.
Yeah. And then remember, I was saying it was stalling out up there, but then that's right before it had that run of all the stops.
Right. And what we're looking at is when we came up here, there was no volume. This is still a low volume node. There was no volume up here. Once we ran those freaking stops, that was it.
Right back down to where we started.
And we said, there's no volume up here. There's no volume up here. So that was our spot, right up here, man. That was our spot. So, hey, it's all right. It's water under the bridge. We'll get it back.
Yeah,
for sure. What do you scratch? Or are you down?
No, I'm down almost $2,000. I have a $3,000 daily loss on it.
Like that?
Yeah, like that. All right. There's no crying in trading.
There's no crying in trading.
Well, I have seen one. I have seen a clerk cry. I know I've seen it happen before.
Oh yeah, I have to.
Yeah.
I've definitely seen it before, and I've almost wanted to, but then I realized, it's just money. But it's more than money. It's your ego.
And somebody else said it's just money in here. No, it's capital preservation. It's staying true to your, what you're saying or what your trading buddy's giving you input on. Yeah, but I'm moving on from this trade.
It messes with your ego. It messes with your thought process. It messes with, am I meant for this? Can I hang in this job? Can I, you question yourself a little bit, kind of like we always go back to the sports stuff or anything, you start questioning yourself a little bit, but that's what we're here for, stay centered as much as you can. Of course, this market's just going to go sideways now for the rest of the day.
I questioned myself once. I thought I was wrong once, but it turns out I was mistaken.
I'm going to ask your wife about that one, John.
Oh, Donna's got stories, I'm sure.
Oh yes, of course. Yes, she knows exactly what an idiot I am.
Oh my God,
dude! So
and that's why I stayed married.
Dude, so Patak, don't sweat it, man. There's a lot more opportunity coming this week.
Let's move on. I'm moving on. I got a storm in here saying, Michael, look left. Michael, look left, Michael. Look left. And you can see the last night's low is 14,800. Why not wait to reach closer to that point?
Hey, Michael, look, it's Kevin James. He's here to cheer you up.
Oh,
last time mortgage rates were this high, he was the most popular man on television.
Oh my goodness,
dude! That pick is
like Kevin
around
James.
The internet a lot lately.
I like Kevin James.
Does anybody know? So I've seen this floating all around online. Does anyone know why precisely this photo of Kevin James has been flying around the internet?
No idea. But yes, I've seen it.
Probably started it.
It's funny. Patak, do you know who that guy is?
I'm waiting for Jack to tell us why.
I'm not good at names. Like, when I see these actors, I'm like, oh, that's blah, blah, blah. I'm like,
he's Paul Blart from Mall Cop.
Paul Blart, thank you.
Yeah, Paul Blart, yeah.
All right, so they're trying to tick it lower, but buyers come back in.
They are. They're taking it lower. It's been going lower since
for sure, it's going to go lower. I mean, okay, so it looks like September's going to make for back-to-back down months in equities.
Yep.
And that's because, John, no new information is coming to the market? Or
it would have to be a hell of a rally to close September higher.
Yes, it would.
Think of the uncertainties.
Yeah, agreed.
The market's going to rally if we don't have any bad news, but we've been hearing and feeling bad news.
Agree. So you think this is more sentiment than anything else?
Well, I mean, you look at the daily here, in the S&Ps and the NASDAQ, it's technical as well. We had a triangle formation. We broke below weekly kickoff low. We became directional. The measured move in the NASDAQ takes us down to 14,370 approximately.
Yep.
And look at today. What do we have below us to focus on the daily chart? We got nothing.
Nothing.
There's
Look out
nothing but
below.
space here.
Look out below.
Yeah.
Well, speaking of looking out below, take a look at gold.
How's it? We cooking over there?
We are falling hard.
Yeah, this is another one of those breakout situations. Here, check this one out. Now, here, look at the daily. Okay. Triangle formation, weekly kickoff low, bam.
Yeah, see you later. Damn.
Right?
I'm
What's the swing
falling,
low here?
and I can't get up.
1913.60 is the next swing low. 1913, so another $70, another $7 a contract before we find our next swing low.
And it is the daily for those that are.
That is
looking
the
at it.
daily.
It's
Yes,
daily.
correct.
Yes, it
Here's the
is.
30. So here's our breakout of that trend line. Here's our breakout below weekly kickoff low. If only it was this easy in foresight as it is in hindsight.
Exactly. That's the thing with these charts. They're always backwards looking. It's tough for forward looking.
Astrology for traders.
Right, you said it, man. You
Astronomy
said it.
or astrology?
Astrology.
But we had technical breakouts in the equities and in gold that basically said you can limit risk on the short side, get short somehow. Limit risk, get short. And it's worked beautifully for both contracts.
Right.
Or all, the equities and gold.
Here in the YouTube channel, props to Terry. Terry had this call here in gold. Good job, Terry.
Nice job.
That boy. That's how you, Terry. Good job.
Nice. So yeah, it's trading. It is
At least we're moving.
it's a love-hate business, Andre. How many times in your career have you hated it, and how many times have you loved it?
I've loved it more than I've hated it, but I've definitely once the top blew off, I punched a screen once. That was bad.
I've been your friend for a long time, and I know that you'll go radio silent if not alienate yourself from the planet. And that's when you know. And that's when you know Andre's on a. Hey, have you talked to Andre? No, I think he took a hit in trading.
It's true. That's the problem. It's true. Like it's the only thing that consumes you. And granted, I didn't have this because when you go in the trading gallery, trading office, you're just looking at all your competition. So no one's feeling bad for you per se, but you don't really want someone to feel bad for you. It's just no one's going to sit there and say, hey, no one's going to call out trades to you because essentially you're taking their trades. But I've definitely gone radio silent a few days. And then come back, mental health days, so to speak. It's just the nature of this business. It's not always the easiest. But man, when it's cooking, there's nothing like it.
There's nothing like it. We've talked about this before. Like, it'd be great. We talked about in sports. What would you rather have, like a walk-off home run or a buzzer beater, or catch a Hail Mary? I think I'm not saying it's the same because you got the roar of the crowd and all those. But when you have a day where you just crush it,
for sure.
And consistency behind that, like crush it and then keep it and then crush. There are like a hot streak. Trader goes through these awesome, and it's just such a great feeling because you see that number is like opportunity, and that's opportunity to pull that out, put it in your pocket.
Keep in mind, I'd say it also depends on market state. Finally, I think we're starting to see a little uptick in volatility. I don't know if the VIX has been trading, but I think we're starting to see a little bit more volatility, which will lead to more opportunity. But for most of the month of September was not the easiest trade. I mean, like we were talking about, bouncing between 4,400 and 4,600 in the S&Ps. We've finally broken out of that to the downside, like John said. Starting to get a feeling in whiffs of some, bad news, so to speak, with the Fed speak, oil prices, although oil seems to stalled out. Oil prices, 10-year yields. So, I mean, maybe we'll start seeing an uptick in volatility, which leads to trading opportunities, which leads to profits. So,
Cam just pointed out E-mini S&P is just traded down to Lacey's weekly kickoff low.
There you go. There you go.
Let's get back in there.
That.
So yeah, I think definitely more opportunity. If this is just the start to the volatility, October should be an interesting month.
It always typically is. October, November are pretty good trade months. Zeke,
do you guys believe? I was reading this article yesterday, or maybe it was Sunday, with my weekly prep about the September swoon. I know that Jack can jump in on like certain months have certain directional biases for equities. Do you guys believe in that, or that just happen? Is that just happenstance and just coincidental?
So there's definitely months that will have higher or lower volume.
Okay.
There used to be this whole thing about October being kind of fear October, but some of that is really just you happen to have two of the biggest meltdowns, if not the biggest in the history of the markets, just happen to happen in October, and maybe that skews the average a little bit. I don't think that there's really that much that could be gained to it. Certainly not something I would trade on.
Agree. Because it's like, sell in May and walk away, September swoon, and then you talk about October. So I think a little bit too much stock is put into that. But certainly something you see damn near every year. They write the same damn article, and maybe gets in your head a little bit.
Well, here's a question: does that sort of transition from? I remember hearing that on the floor all the time. Did that really transition to electronic trading?
I mean, we have to look at the data and look at the historicals for that, but they sure seem to be rinse and repeating that article and that sentiment. So I always wondered if there's any credence to that.
Well, like Lehman went bankrupt on September 15th, so like that was really accelerating into October. Obviously, the 1929 crash was in October, I believe. So that'll skew things.
Yeah, I guess it will definitely carry some weight to the direction. You looking to get in there, Michael?
I'm in 42s.
Sorry, you went silent for a solid minute, but
I was looking at this pullback, and I'm short. I'm logged 2 from 42.
Yeah, baby, let's go.
No cheerleading today.
I ain't cheerleading shit. I'm just fucking pumping you up.
Oh, thank you. I don't know. I'm wallowing in it right now. I don't know why I'm so
Well, look at that board behind your wall. All right, build a little confidence here. You've got a lot of winning days prior.
Well, I'll take one or two a week. Controlled losses.
There you go. Management, man.
What's cooking on tilt? Anything?
Nothing. 55-45. Quiet.
Maybe when it goes 50-50 like that, that's when we can take another leg lower.
Yes, when there's it's
see the momentum.
Yeah.
I don't know. See what John's.
It doesn't.
I'm not saying anything.
Uh-oh.
I'm just gonna let this play and.
What? My position?
No, I don't know anything.
Okay, talk to me. What?
No, you're at the low of the area of balance. I don't hate it.
I mean, the U.S. government's facing another shutdown. Stop me if you've heard this before. U.S. government's
it's not shutting down. It's just like they play these games
every 6 months. Every 6 months they do this dance. But you know what it takes? It takes for the markets to put pressure on them to get their act together. You see this all the time.
Yeah.
So I got short, I got long 42s, 43s pretty much. It's only gone up to 50?
I'm getting short.
53, like 10 handles. So that's not really a move that.
Andre.
Sorry. Did I say that out loud?
What do you do?
Nothing. Want to get it?
I mean, if you guys want to, I'm a fade. You can fade. You can fade people. You be around traders, and you're like, they are not trading well. And then they'd be like 80 bid. I'm like, sold.
We definitely see that. You'll definitely see traders that you just fade and it works, which is scary.
Perry just completed the trading combine.
Okay.
Congratulations,
Nice.
Perry.
Zeke
Well done.
Trades just did it as well. Congratulations.
Nice.
Oh, I had another question, I guess for Johnny. So you know how you primarily look at the 30-minute chart?
Yes.
Do you think that trade duration should correlate to what, with your chart analysis? Should your trade durations be a little bit more long-term because you're looking and making your analysis based on 30-minute charts, i.e.,
Yeah.
for example, if I'm looking at 5-minute charts, my trades should be around the 5-minute mark per se, or definitely with more short-term bias than as a long-term, because right.
Well, if I'm looking at the context of the market on a daily and a 30-minute chart, my time frames, my opportunities, I'm going to get fewer of them, but they should be worth more. So I don't think that there's any correlation to like 30-minute charts should provide opportunities for 30 minutes.
Sure.
Right. But I mean, there are times when I'll look down to the 5-minute chart to say, okay, thinking about this, is the 5-minute chart maybe showing me a bottom here? Or, is this, maybe the 5-minute chart will give me a better kind of more precise trade location. But if I look at it too long, I'll start to have heart palpitations. So I got to go back to the 30.
I got you. So the 30 blocks out a lot of the noise, but 5 helps you find an entry.
Yes.
Okay. That's
yes. From time to time.
From time, of course. There's no absolutes in this gig. That's
100%.
There's your 100%. That's your absolute.
There is absolutes, Andre.
What is that, Michael?
You're gonna either love it or hate it.
There's a 50 Cent song that goes like
Depends on the day.
Yeah.
Oh, by the way, how's the Nelly concert?
It was great.
That's so wild. A private Nelly show.
He banged, man. It was great. It was just like I was going into it being like, I don't know. I mean, like, I was okay with Nelly, but it was great.
He exceeded expectations. Your very harsh expectations of a St. Louis rapper.
Yeah, yeah.
Come on, man.
All right, there's a 10 handle move now, but I'm not taking my 10 off because I'm looking for 15.
Here's a question from Jose. How long do you guys hold trades?
Well, I think it's different for all of us, really.
I think the average hold time at Topstep's like 20-some minutes.
Is that right?
Yeah, I think we've done that. We shared that stat.
That's pretty healthy. That's pretty healthy.
Yeah. This market does not want to firm up.
So what is that telling you? Because I agree. I see that too.
It tells 45 evens.
Yeah, I see it. We got any big headlines as to why we're down so much, or is it just continuation?
I think it's all. Go ahead, Hug.
I mean, we did have some economic numbers come out, but those are out. Maybe that's some of the digestion. But new home sales dropping by 25,000 from last month. They actually increased it. Well, more than that. It's a more than 60,000 new home sale drop, and I think that's actually bad news is good news, right? But it's not really being presented by the marketplace. Consumer confidence. We're looking for 105.5. It came out 103. It's a little lower, but they did revise the last month's higher. So it's like juggling. You're going to drop a ball once in a while, but which is the right ball? Who knows? Yeah. Who knows what any of that means? Focus on what the market is telling us.
That's right.
And know that underlying there is a underlying uncertainty in the market.
There is.
So I'm not looking for any longs that I'm going to hold on to for a long period of time. Let's put it that way.
You mean like me? But I got a good entry. But so far, if
long, I'm short.
No, I said I was long from 42.75.
That's why when you said Andre was like, I'm getting short. I'm like, Andre.
Well, gentlemen, we've got about 24 after the hour here in Chicago time, and we've got Mick on deck. So Andre, Appreciate you being with us here, brother.
I covered. It's dancing around there too long.
Yeah, I will graciously bow out here. This has been real. In all seriousness, Patak's, big respect on you, finding within yourself to get up and walk away. Hell, we've definitely buried accounts by not walking away. I hope everyone was able to gain some valuable shit from that. But yeah, man, let's keep trading. That was fun. We'll talk to you guys tomorrow.
Trey. Take care, partner.
Thanks, Trey.
Later.
All right.
And Michael, I echo Andre. I think it's been a tough trade, tough day. You're
Tough
handling things very well.
Well, thank you.
All right, we got shoulder tap coming up here right now. Time to share some success. Time to avoid some failure. We'll see what Mick's got to say. We'll be right back.
Well, I need a minute there, Eddie, to get old Mick in.
We'll be right back.
Oh, you guys. No, just talk about something for like 30 seconds. I gotta get him set up.
What can we do in a minute? All right.
Eddie, you are funny.
Well, looks ain't everything, but, try to do my best here. Don't forget, hey, like and subscribe. There we go. Like and subscribe. Actually, we've got a good number here. 930 people watching. We've got 659 likes, even including mine. So 658. We could do that, right? We could put I like what we're doing. So
I think so too.
I'm gonna put my like in there.
What do you mean? You can totally do that.
Okay.
Your opinion's count here, Eddie.
Thanks, man. Even though I picked last.
We need another like. It's 666.
All right,
there we go.
There we go. Now
hold on a second. We're talking here, Jack. Okay.
Jack, you wait. You wait
now. You wait now. Come on. All right. We'll be right back. Mick, welcome.
Hey, good morning, guys. Thanks for having me on.
Great to have you here, Mick. And gosh, I tell you, I am just so envious of that wonderful mustache of yours.
I know, it's fantastic.
It's like a badass mustache, man. It's got like its own like zip code.
I had someone in the elevator at the Board of Trade yesterday say, "You really got that Ted Lasso thing going for you."
The Ted Lasso.
I thought it comes with a black leather jacket and a 2-year lease on a Harley.
Wow.
I don't
actually. Go on. I was saying, actually, I mean, if you go, some of us remember the Yankees years ago. I think like the whole team had mustaches like that. So that's what I keep seeing. The old 80s, 90s Yankees.
Isn't there something with the Yankees where the only facial hair that they can have is actually a mustache? I think they're the only league in the or the only team in the MLB where they have a facial hair restriction like that.
I think the Reds when that lady owned the team, she didn't want any facial hair with the Cincinnati Reds. But I think you're right there, Mick.
I thought you couldn't have long hair on the Yankees either.
That's another thing too. That's another thing. I think nothing.
Hey,
touching your shoulders.
Nobody do shots. This isn't analogies, so nobody's doing shots.
Yeah, they like them clean cut out there in New York.
Yeah.
You got Goose Gossage. I met him on Division Street one day, drunk off his ass. But he was totally cool. Goose Gossage. Good old release picture for you old school baseball fans. Marge Schott, that's who it is.
Unfamiliar with that name.
Goose Gossage. He used to play with White Sox, Yankees. Who else? Anyway.
All right.
What do you got for us, Mick?
Let's dive in. I've got some gentle shoulder taps for Michael and Dan today. You guys have been trading well. I know you're down a little bit. Michael, I was listening in earlier. I had you up on the background. I know you're in a good headspace. It's still early in the week. And I know Dan's well ahead since he started showing some of his trades in the crude oil from last week. And staying within your loss limits, guys. So, nothing to really worry about there, but just wanted to acknowledge that. Got a lot of shout outs today. Yesterday morning, I mentioned there was a lot of red on the board today. today, we got a lot of green on the board, people catching downside moves in the equities. So I've got a big shout out to Wayne W., who's trading in an XFA, up $8,500. He's trade copying. He's got 2 express funded accounts, up $4,250 in each of those, totaling $8,500. So that's a really good day for him. Nathan B., also in an XFA, up $5,500 on the day. Richard F., live account, up $6,800, trading the NASDAQ. Chad Ellis, who I believe we featured last week. Chad had been called up from his express funded account to a live account, and he's only in one of his first few days trading in the live account, up $2,700 today. Nothing to balk at there while we're talking about baseball. And then Jackson M.
Oh, take a shot. Take a shot. That was an analogy.
Analogies.
A reference.
We do have some stuff over there at the kitchenette in the office here. We had, like I said, after Friday when we had those 3 traders put up over 70 grand in their live accounts, we had a little bit of a party in here before we left the office. So, but it's a little too early in the day for me today. Jackson M., last guy up big today, up 6,300, also catching downside moves in his XFA, trading the NASDAQ. So really good trading out of those guys. We have a ton of other green on the board today. A lot of, $4,000, $3,000, $1,000. Today I'm just calling out the big ones that we have. But great job, everybody, today in their live funded accounts, express funded accounts. We definitely are turning the corner here on Tuesday for the week. So hopefully the momentum continues, not to the downside in the markets, but as long as our guys and gals are making money, that's the momentum I'm talking about.
Is that what's over your shoulder right now?
Yes.
Nice.
Let me see. Over here. Yeah, I've got my wrist boards up there a little in the distance. I don't want everybody watching to be able to see everything, but these are the boards that I'm watching our traders on. I've got Brett over here. He's not in today, but he's set up next to me, and he's watching the same stuff.
Nice. Hey, Mick, you know what? Let me ask you. You trade. What do you usually do on a bad day? If you've got some trade after trade, and what's your process if you know things aren't working right?
Well, that's a good question, Eddie. I'm not day trading so much anymore. Myself personally, I'm not going to put anything on that I can't hold for at least a couple weeks. I have a much higher time frame, and with that, I make far fewer trades than I used to. When I was day trading, doing a little bit of swing trading, I would do something nice for myself on a losing day. If I had a bad day, I'd treat myself to a nice lunch or a nice dinner. And then I'd be very modest when I have winning days. So I think all too often people get very hard on themselves. I don't get hard on myself. I used to. But because as I gradually became a little bit more educated and a little bit more professional, I wasn't too emotional about my losing days because I framed out every trade that I made and I stayed within my risk limits. So if you're doing that, it stings a lot less. First thing you do before you leave, if you're going to call it a day early, you do your homework. If you stay and trade until the close, you do your homework, see where you could have done better, see what went wrong, make some notes of it. Journaling was something I did light journaling, but I know it's very valuable to a lot of people. I was good at remembering the mistakes I was making, and I was very good at not replicating those. So I always did something nice for myself on those losing days. You don't really, us psychologically, it's okay to be hard on ourselves when we do something, but you don't need to punish yourself also, which is why I take myself out for a steak lunch. Wow. Or try and do something fun, because trading was a part of my life, is a part of my life, but it sure isn't my life. There's a lot more to your day than trading. So whether it's getting together with friends, doing something fun, take care of yourself. That's first and foremost. If you can take care of yourself, it's going to take care of your trading to a certain extent. So that's what I like to do. Just treat myself nicely on those losing days. Get over it, get serious about it, and come back and look for the next trade. Manage my trade, frame it out, and it never had a storm cloud hanging over my head for too long.
That's the way to approach it.
Oh, I have always wanted to do that, but I don't think I could pull it off. How did it feel?
So, I mean, it's got to feel good, when you're doing it.
I thought that sound was going the wrong direction.
I sure did too.
No,
I guess we got to get our minds out of the gutter. It's a little early.
Yeah. Oh my God, man.
I'll take my mind in the gutter right now. That's a more pleasant place to be.
Well, then how about this? How about
Never give up. Never surrender.
There you go.
Well, you need things like that from Eddie to, make you laugh. Michael, you're down a little bit on the day. You need something to make you laugh, and I know you're not too shaken by it, so never hurts to have some laughs, though.
No, that's what you need. That's why we called this. When we were doing Topstep TV, we're like, well, what's the real point of why we're doing this? Well, great trading is like watching paint dry. We all like to be around traders. We are all traders, either actively now or actively then. We can talk it, shop it, and all that kind of stuff. And then and we just need some tradertainment. And then that's kind of where we got to. And you needed to have that kind of that laugh. I wouldn't be having a laugh right now if I had nobody on here. If I had nothing to listen. CNBC is boring as whatever. That's good for financial financial news, not financial entertainment, but
Sure thing. So Eddie, if I could, Michael, actually, I want to ask you the same question Eddie asked me. You're down about 2,000 on the day last I saw. What's your plan for the rest of the day? How do you I know you're within your risk limits. I know you're, a veteran trader. I'm sure this isn't, bugging you too much. We all want to be up money. But what are you going to do with the rest of your day when we sign off from Topstep TV, get the rest of your work stuff done? What are you going to do if you end the day where you are right now?
Well,
steak lunch.
Yeah, I mean, I'm going to probably go hit some balls at the driving range. That's what I want to do. It's beautiful out. All the colors are changing. I want to be outside. I know you guys, it's pouring there or whatever, but it's beautiful here. So I'm going to take advantage of that. Other than that, I probably, once I shut this off, will tune it out. Tomorrow, I need to really quickly not make sure I'm thinking about yesterday. Mm-hmm. So, but other than that, I mean, just walk away. I'm not going to hit my loss limit. So that's good. That teaches me that instills discipline. How about that? That strengthens my discipline. Yeah.
Sounds like a good afternoon. I wish I could go hit some balls this afternoon. We've got the rain. I've got to go pick up the boat that just got fixed. We had some engine issues a couple weeks ago, so I had to yank it out of the water. Oh, no. Golf, therapeutic, hit the range. We can never get enough practice with the golf game. I know I was out with Dan on Sunday, and I think we both dropped some F-bombs for over our game. But all in all, it was fun. So cool. Thanks for sharing, Michael. Mm-hmm. And yeah, like you said, tomorrow you're going to come in, you're not going to think about today or try and not think about today. One trading day at a time. Right. We've got 3 more chances this week after the session closes today. So one day at a time, one trade at a time. With that, let's start talking about some traders who I want to feature today. If we could pull up the first trading card for Pedro E., one of our traders who's been with us since March of 2020.
Pedro.
From Miramar, Florida. Ooh, I love that picture. Makes me want to get to the ocean.
What's that in the background? What are those?
Those are cumulus clouds, Eddie.
Cumulonimbus.
Cumulonimbus. I can't tell if that's a sunrise or sunset.
One looks one looks like a mushroom cloud.
I bet you I'm going to go off. It's a sunrise because I don't see any cars, very many cars. That's
that's a good way to go there, Sherlock.
Yeah. Miramar, I didn't look at Google Maps to see geographically where that's at, but
cool.
Pink sky at night, sailor's delight. Pink sky in morning, sailors take warning. So it'll be the tell of what the water's looking like.
You don't need to worry about that, Mick. You're on a lake.
I'm on a lake that could be like an ocean, and the problem with that is, if I can kind of digress a little bit while we're talking about water and boats, when I had engine problems, I was 35 minutes north of Chicago, and it was a beautiful morning when the wind was coming out of the west along the west coast of Lake Michigan. The second I had issues with the engine is when the winds turned and started coming straight out of the north, and it went from glass water to 5+ foot waves, small craft advisory. And while the engine was still running, I could only go about 3-4 miles an hour. And it was a long 7-hour ride back to Chicago from where I was. Got in late that night, and then had to trail the boat to the service repair guys a couple days after that. So that wasn't fun. I was kind of shaking. Had to throw my life jacket on, put my kill switch on in case anything bad happened with those waves. But that was not a fun day, but it's all fixed now.
No, that's
scary.
It was a little scary. I had my wife and my dog out there with me, and didn't want anything bad to happen. But let's talk more about Pedro E. Average daily P&L, $2,500.
Nice.
He is right 2/3 of the time with his winning days, 67% winning days, and a biggest winning day, up 15 grand, which was just a couple days ago.
live or XFA.
He's in an XFA. We transferred him, or he was in an XFA. We called him up yesterday, transferring him to live. So he will be trading end of this week in a live account if he so chooses. But one thing I really liked about this trader is he's got that big average daily P&L. He puts up large winning days. He's swinging for the fences. He's trading big size. But this is kind of unique. One thing I see out of Pedro that I don't see with other traders that are commonly swinging for the fences and trading big size is he's still staying very far away from his daily loss limit of 3,000 in this 150K account. So that's kind of a rare breed. Usually the people that trade big, swing big, have huge winning days, they are going to butt up against that $3,000 daily loss limit in this size account. He's not even coming close. I think his biggest losing day was only half of that 3,000. So we found that to be really impressive. He's consistently profitable, and when he's profitable, he's putting up big numbers. So that's why we called him up to live yesterday.
Cool.
Awesome.
All right.
So, live call up. Love it.
Live call up, and he's going to be starting in his live account with a little over 30 grand too. So
take a payout. Did Pedro take a payout?
We just transferred him yesterday, so he's got the ability to take half of that while he's in the transition process like we talked about yesterday. Even if he had already taken a payout a couple days prior to that transfer, regardless of those 5 winning days, if they're met or not, in that transition phase, you can take 50%. So I've yet to see if the payout request had come through. That's just something I look at a little bit later in the afternoon.
What's the contract per trade? What's the size?
He's trading up to 15 contracts, but he's not always trading 15 contracts, which I like. Some people, once they get the ability to trade 15, every single trade's 15 contracts. He's looking at the market state. He's looking at his risk for the day. And he's not trading 15 just because he can trade 15. I still see him slap on 2 contracts here and there. And I love that. It's a guy, it shows that Pedro's nimble and he doesn't need to be doing something every time. He's looking at the scenario and he's implementing his best discretion as he sees fit. So he's going to be a great addition to our traders in the live accounts. Can't wait
Maybe
to see
we get him on interview or something. That'd be cool.
Yeah,
what do we got next there, Mick?
Let's talk about Gao.
Next card. Whoa, look at that.
Gao's in
Quebec?
an XFA, and I actually, right after I get off of this segment, I'm going to be giving Gao a call. I want to see if he can come up on Thursday for our Power Players segment. Michael, if you're doing that interview, we really like what he's doing, and we're thinking about calling him up. Might be fun if we can get him to sign on with us on Thursday. It might be the day to do it. He's out of Canada. Average daily P&L, $490. He's trading NASDAQ and micro NASDAQ, which I like to see too. Sometimes you don't need to trade the full contract size. Micros, I like it when I see traders also trading micros. It tells me that they might want to be trading, but they might not have the full confidence in the market. So at which point they go to trade a smaller contract because they still want to have their toe in the water to keep a good feel, but they're not taking huge risk. Means they're not going to have that much reward if they're right, but they're also not going to have the risk if they're wrong. So I really like that. And one thing I've seen out of Gao is on days that he's up money and wants to still stay in tune, that's when he switches over to the micros. After he's made his money for the day, it's super smart. It's super smart. And in doing so, you're not going to pile on a bunch more P&L for profits, but you're also not going to erode any of the profits that you have on the day. So I really like that. He's trading 1s and 2s. He's selective with his trades, averaging only 5 trades a day. I love seeing traders be selective. I love seeing people with big account balances still trading 1s and 2s. It tells me they're risk averse. And, overall, I can't wait to have the conversation with him. I hope he answers my phone call. Gao, if you're watching, I'm going to be calling you here in the next 15 minutes or so.
There you go. All right. Who else we got there, Mick?
This one is going to be Anthony. I want to talk about Anthony. And you guys might be looking at this card and seeing the notes and asking, why is he getting a shout out on shoulder tap? Average daily P&L, negative $40. Anthony is getting a shoulder tap today. He's getting a call out, a shout out, because he made $1,000 today in his live account. And it's his biggest winning day he's had thus far in his live account. He's been trading with us in the live accounts since he's been in there since May, I believe. He's got 33 trading days under his belt. He started in a standard funded account. So he started actually with a $0 starting balance. He didn't start with, whatever balance was transferred over from his express funded account to a live account. He started with 0. And I wanted to shout him out today, not only because he put up $1,000, but because he's been grinding it out. And I want our viewers to know that grinding it out is not a bad thing. First day I started I shouldn't say first day when I started. When I started trading, I had talked to all the smart, successful traders that I knew from down on the floor in the grains room. Some of the common advice I had gotten from them is be okay scratching trades. Be okay scratching trades. And even if you're at break even after your first year, you're off to a really good start. And me as a young cocky child, at the time I was 20 years old, I was like, oh yeah, whatever, I'm gonna make 200 grand this year, break even at the end of the year. No way, not me. But I was break even at the end of the year, and it was kind of a humbling experience because I didn't think it was going to be how it started. And I just wanted to call this out for everybody out there watching. If you're treading water, you're doing something positive. You don't need to be making money hand over fist. If you're consistent, which Anthony is, he doesn't have big losing days. He doesn't have big winning days. He's been slightly debit for a little while on this account, and now with this $1,000 day, he's back up positive, and I'm just really happy for him. This is a feel-good shout-out for me today. He's super selective, so he's got to be doing something else, This is a secondary source of income or a secondary job for him. And I think, all good stuff here. I'm cheering you on, Anthony. He's out of France. And I think that one area for improvement, and not that he's doing anything wrong, there's nothing wrong with, being down a little bit after 34 trading days. Today's his 34th day.
Oh, nice.
He's back up after 34 days to positive. That's good. I think he could also, as long as he's implementing the same strategy, might not be a bad thing to leverage his practice account that we give him a little bit more. But I really liked this, and it's a unique situation, but I wanted to share, and that's what I got for you guys today.
Awesome.
Appreciate it.
I love I love the last one. I mean, I love the ones that are, of course, that are doing well, but I love these stories. We've been talking about how hard it is to fight out of holes and be positive, and that's great to see.
Yeah, it takes fortitude to keep grinding it out, and then I think having a big winning day is definitely a boost that he needs, and a confidence builder, which we all need from time to time. So a big shout out to him, and he's another person I'm going to give a call because he's not getting a shoulder tap today. He's getting a pat on the back.
There you go. Hey, real quick, Mick, I've seen this question come up before. Can we share what platforms they're using? Can we add that to the cards?
I could, sure. Yeah, if that's what we want.
There's been a few questions. I just saw one right now and a few that passed, but people want to just get an idea what platforms they're using. But anyway, that would be cool. We'd appreciate it, and we appreciate you, Mick, for coming on. And now it's time to put on your superhero cape and make some calls, and definitely tell those traders that we're very proud of them.
I'll pass that along. Thanks a lot for having me on, you guys. I enjoyed this one. Take care.
Thanks for coming on.
All right, peace. All right, boys and girls, we've got a top quiz coming up here, and we've got, of course, Jack, and Alyssa's going to join us. I think Alyssa. Yeah, there it is. Alyssa's going to join us. I think Jack's going to post here. Remember, it's in Kahoot, or no, it's in Kahoot. It's Kahoot.it. All right. Now, I tell you, we're giving away a lot today. So if you want to participate, this is what it's about. Jack, what else do we got cooking for our listeners and watchers?
Yeah, I'll say this one. Sorry, got to turn up my volume there.
There you go.
Yeah, we're going to give away 5 50K combines to random people that post in the chat what they've learned about trading. Preferably use the word learn in your comment. Will help me find these, and then I'll announce those tomorrow morning. We're trying to figure out the best way possible to pick random people, but it is not the easiest in live YouTube. So the quiz is coming up soon. Go to Kahoot.it. I'll let you guys sign off for now.
All right. We'll be back, though, for group coaching with Rob, and he's going to be talking about small winners. So right after the power players, we've got group coaching. Don't go away. Thanks, Jack.
Hey, thanks, guys. I'm checking out, too. Really appreciate it. I'm short right now from 61, so I'm down 1,000 right now, which is much better than being down 2,000. So I feel good about making this up a bit. You can share my screen, Jack, if you want.
Yeah, one sec.
Yeah.
So you're coming back a bit, huh?
I did until it just bounced off that. But, yeah, no, I'm short right here. Or short from up here. I'm short from like all the way up there, 55 half. I just got filled on one. Take one more off. Riding 2. I'll ride this 2, and I'm going to put the stop all the way up here. Cancel that stop. 2-2. Boom. I'm going to let this set. If we sell off the rest of the day, I'll let you guys know tomorrow how my P&L turns out. But if not, I'll scratch that, and then we'll call it a day. But have a good one. I appreciate it. Good trading with you guys today.
Hello, everybody. Welcome to Top Quiz. Alyssa, how you doing?
Hey, Jack. Doing well. How are you?
I'm doing just fine. I cut off the sound a little early there at the end, so MP was just sending his best to you all. If this is your first time playing, you can click those links I shared or go to kahoot.it and type in that game pin. You'll submit an email so they can contact you if you win. The top 3 people get 150K, 100K, 50K combine. And today, because of a special request from Danielle, this week we are giving out 10 50K combines each day. We'll do 5 random people from the quiz, and I will slog through the chat to find 5 random people from there. Should be fun. Remember to put in something you've learned about trading to do it. All right. Alyssa, I believe you hold the record so far for the most correct answers in a game. Am I correct in that assumption?
Wonderful. That's what you want to hear. Probably.
Yeah, seems like it. So just a reminder, everyone, once you sign in there, there's going to be 8 multiple choice questions. You have 10 seconds to answer them right. Answer them fast because you get more points if you answer them quickly. What else? 8-second delay between what we're doing in YouTube. So look at your device and start looking at it right now, because when the questions start coming, it'll be before we talk about it. So I think that covers all the bases. You ready to do this thing?
Let's do it, Jack.
All right. Get my screen set up here. And who will be last? Chucky, T, J Trader, TR2000, Banshee, No Code. All right. I'm going to hit start. Naz, your last one in. Ed with 2 Ds. Oh, I got to start it. All right. Here we go. Top quiz for 9/26/2020. 3, 2, 1. Lego. Sean Connery is tied with this actor for playing James Bond in the most films. Is it Roger Moore, Daniel Craig, Pierce, or Timothy Dalton?
I don't know. Daniel Craig?
It's close on top. Roger Moore and Sean Connery are tied with 7 Bond films apiece. Daniel Craig is just behind that, I think, with maybe 6, but it's close. Not Timothy Dalton, although he's great in Hot Fuzz. All right. You've seen that, right?
Oh, Jack. Yes.
Yes, of course. Latula, Ku and Jim's. NQ is this person's bay. All right. Let's get on to the second question. Make sure nothing's... All right. Next question. About how many hours of YouTube content is uploaded every hour? 300, 3,000, 30,000, or 300,000?
I feel like it has to be 300,000, right?
It's 30,000, as a matter of fact, according to the source.
Oh.
That's still a lot. I mean, that's still 30,000 times the amount of time. That's a lot. 300,000 would be quite a bit, although there are a lot of streamers out there. Yeah. We are doing our part to contribute to that today. Ku, NQ is Bay. Here we go. Phantom and Johnny Dollar. I hope that's that person's real name. All right. Next
That'd be awesome.
Question is as follows. What is Michael Caine's birth name? Is it Michael Dankworth, Maurice Micklewhite, Tom Jones, or James Farnsby?
I don't know, Jack. Is it Maurice Micklewhite?
It is indeed the rather ridiculous name of Maurice Micklewhite. Yeah, I get why he changed that one. All right.
Yeah, it checks.
I asked this question before in rehearsals way back, and I didn't include the. I'll have to tell you what the other option I chose was. I don't know if it's PG. It's not bad. All right, Ku, NQ's Bay, and Johnny Dollar. You know me, Alyssa.
I know you, Jack.
Right. Next question. A woman from this country is believed to have the longest documented and verified human lifespan. Is it the country Japan, United States, Spain, or France?
It's Japan?
It's France.
Oh,
That's what I got there. There is the woman, making sure again. The oldest living person, I guess, is currently in Spain. But yeah, it was a 122-year-old woman in France. And if you want, JD says this is rigged. I wish I could. All right.
if it were, I would have guessed it right.
Exactly. I mean, I probably would have guessed Japan too, but I always get scared when people overwhelmingly choose the wrong one. All right, Johnny Dollar, NQ's Bay, and Koo are up top. Okay, you ready? Question number 5.
I'm ready.
What year was the very first model of the iPhone released? 2005, 7, 2009, or 2011?
I feel like it was 2007.
It was indeed. I was still rocking the Razor for a few years after that. I'll date myself. I was in college in 2007. Yes.
I think I was in middle school.
Well, don't rub it in. All right. Next question. What was Superman's birth name? It's not Maurice Micklewhite. Was it Jor-El, Clark, Kal-El, or Zod?
It was Kal-El, right?
Yes, it was. Good show, Alyssa.
Yay!
Johnny Dollar takes the lead on that. We got 2 questions left, and then we'll get to the interview with KV. Next question is, the Roman god of war inspired the name of which planet? Jupiter, Neptune, Mercury, or Mars?
It is Jupiter, Mercury.
It is Mars.
None of them.
You nearly said Jumanji there. Watch out. All right. We got some Roman history. How often do you think of Rome?
Stop. I had to ask my partner that the other week when it was trending on TikTok.
Yeah. That's one I don't really understand. I don't think about it that much. In fact, James wrote that question for today. All right. Okay. We got to get to the interview. So we got one more. Will it be Johnny Dollar? Last question. Of the animated films listed below, which made the most money worldwide? Frozen 2, The Lion King, the good one from 1994, Toy Story 3, or the Super Mario Brothers movie?
It was The Lion King?
No, it was Frozen 2. And take it up with James Harden if that's not the case. The Lion King, the bad one, is actually up there.
Really?
Okay, so let's see if I'm getting flogged. Too much TV and football? Yeah. I can come up with other things as well. I'll take that into consideration. But in the meantime, here are your winners today. In third place, Koo. Nice and short. Second place, here we go. And the winner today is our good friend, Johnny Dollar. Johnny Dollar, congratulations. Thank you so much for joining us today. I will come back during group coaching with announcing the 5 random winners who played today. And yes, let's see here. Lion King, Frozen 2. Thank you. Oh, Roy Jenkins is buttering me up. He learned that I'm a great person. I'll take it. Oh, my old friend is in 5th. I missed that.
Oh, no.
Yes. All right, everybody. We're going to take a quick break here, a little coffee break, and when we come back, KV will be here to talk to John Hoagland, and you won't want to miss that. Alyssa, thanks again. We'll see you real soon.
Thanks, Jack.
Welcome, everybody, to Power Players. My name is John Hoagland. As always, thanks for trusting us with your time. We've got a very special guest with us today. His name is KV Dima. Right on that last name, right, KV?
Yep, that's good.
All right, excellent. And we're very excited to have KV with us today. He's got quite a story and lots of knowledge and experience to offer to us today. He has a trading community. He's options and a futures trader, 9 years of experience in the financial markets. Knew nothing when he came into it, which is one of the things I'm very excited to talk about, KV. And so for the past 9 years, he's gone, like most of us, go from consistently losing money to now a profitable trader, now trading through options and futures tradings. After starting in penny stocks, he has a website, Illyrian Options Trading Group. I've checked out the website. It is a very good looking website. And at this time, I'd like to just welcome KV to just talk about himself, where he came from, what his story is, and we'll move on from there. Looking forward to hearing it. Welcome, KV.
Thanks for the introduction, Hoag. Hello, everyone. My name's KV, as you all know. I was born in Albania. Many of you probably don't know the place, but it's a small country in Eastern Europe, next to Greece. Hoag?
I know it.
You know
it? On the Adriatic, a boat ride away from the heel of Italy.
Yes, that's correct. So if you think of like the beaches of like Italy, Greece, it is the same exact thing as well, maybe better. But yeah, I came all the way from Albania, moved here when I was 17 on my own, continued college here in New York City, and that's where I kind of got the most kind of fundamental knowledge of the financial markets. Graduated here in New York, business school in finance, and that's where I got most of my experience. I ran the biggest financial organization there on campus, and then from that, I also landed my first Wall Street job at BMO Capital Markets as an equities sales and trader. That's my fundamental experience. Starting with trading, I started back in the days, 2014, 2013, with penny stocks. Wasn't as successful with that. And then options, I started in college, and that's where I got most of my experience in the financial markets. And then futures has been very recent. The futures market has been very recent for me. Actually, I started futures this year. It was mainly because of a lot of things. My clients were looking help into futures. I got introduced to a lot of futures firms, decided to go with Topstep. Seemed that it has been the best decision so far. So futures has been very recent, but I've stuck to the markets that I know the best, that I've traded all the time, and that's S&P 500 and NASDAQ.
Okay, so I've got a little note here. How did you end up landing at Topstep, and by which the way right now you are a funded trader, also working through another trading combine? What made you come to Topstep?
Well, I was always looking at firms that I could get funded with, and there's a lot out there, and especially these days it's becoming a lot saturated as well. So obviously first I did my research on the firms out there. Obviously, first thing, Topstep was the company that started the whole industry, but that put the ground running was Michael. Michael reached out to me on Instagram, so I was like, okay, if the CEO is reaching out, like these people are actually helping their clients, and that's what it has come to. Everyone that has joined from our community has been happy with how Topstep has been running things, the support, all of that, and hasn't disappointed so far.
Great to know. Yeah, if the CEO reaches out to you, it's probably a good bet. It's a good company, huh?
Yes.
So back to Albania, you come from a small village, 7,000 people. Your dad was an electrical engineer and your mom was a school teacher. And then you left Albania to go to college in New York, or did you kind of move to New York and say, I'm going to go to school?
Well, yeah, it's a bit of a long story. I actually moved to New York in 2006. But my family didn't decide to stay here because we all know what happened in 2007, the financial crisis, right? So it wasn't the best situation for my family to move to a completely new country and then start everything from zero. So we went all back, and then I had always New York back in my list. I have to go back. I have to go back. So I came back senior year of high school, and then I transitioned into college. But I always wanted to come back, and that's what I did.
It's a hard thing to do, is to move away from your home country and then move back away from your family. I imagine there were some hard times in doing that.
It's definitely difficult. It's definitely hard. I try to go there a lot through the year, and that's where trading helps a lot because I have the flexibility to do that. I was there during the summer, probably going to the winter as well. So I have the flexibility to do that, but still, the distance is there. No matter if I go 2 times a year, 3 times a year, the distance is there. But I mean, if you have specific goals in life, there's definitely sacrifices that have to be made along the way to achieve those goals. And as long as you are doing everything for the better good for a specific reason, just go with it. Especially if those goals are actually helping what you're sacrificing as well. So if you're supporting your family and all of that, there's going to be sacrifices along the way.
It's fantastic that you're able to accomplish those things. And it says here you travel quite a bit, and I would imagine you travel back home quite a lot.
Quite a lot. So again, trading has allowed me to do that. I love traveling, and I don't want to be stuck in the same place, even though I live in New York. I'm traveling most of the time, and especially it's going to be out of the US. So it's mainly Europe, just because I want to feel like I'm back home. If I travel to some other state in the United States, it's still going to feel like I'm still in New York a little bit. So that's why I like to go out of the country most of the time.
So while you're traveling, you're still actively trading?
I am actively trading, yes. So even right now, I live trade every day with my clients. And even when I'm on vacation, I am live trading. Unless I'm on the plane. And if I'm on the plane, I might be on the computer, maybe send some stuff, some information, some guidance, but I haven't actually tried to join the voice chat and actually try trade from a plane.
It's kind of scary to.
I mean, you might be stuck in the position, so I don't want that to happen.
Yeah, and being on a plane is no place to be stuck in a position, right? So. One of the let me get to some of these other questions. You mentioned that you have a lot of your clients that are working their way through Topstep. They're enjoying their way through Topstep. How, in your view, has Topstep been a benefit to those people?
Well, the biggest thing is taking the risk out of your personal savings, especially these days in the US and probably all around the world. It's getting tough economically, right? The economy, even just the economy overall, is not in the best position. So, and that goes down to the people as well. So taking the risk off your personal savings, I think, is a big help. I mean, paying a fee of $49, $149 to get funded capital is a big help. I tell people, getting funded with Topstep is in the middle of a paper trading account and a real account. So it's in the middle there because, one, you're getting paid, right? If you're making money, you're getting paid. So you have that aspect of the funded account, but you're also not risking your own money, which is that aspect of the paper trading account. So to me, it's the best of both worlds. It takes a little bit the pressure out of that attachment to the money aspect.
I really appreciate that you recognize that. That's one of the things that we were thinking about when starting Topstep was, this is very difficult, and we all know that. KV, I know how difficult trading can be, and learning to trade is, of course, one of the more difficult parts. And learning to trade with your own money is a lot of tuition. It can be very expensive. So I appreciate your thought on, on getting started trading, even as an experienced trader, getting through the trading combine, using somebody else's capital to look for those opportunities. So really appreciate you saying that. Now, you said you trade E-mini, S&P, and the NASDAQ.
Yep.
How do you prepare for a day? And I would imagine that's probably a little bit different when you're at home and when you're on the road.
Yes, yes. So I've changed a little bit my trading lately on how my day goes, just because I was only trading options. And I was only trading options the first 1 hour of the market. So from 9:30 to 10:30, 11 a.m. Eastern, New York time. So that was the only times I used to trade. Now, because I've added futures as well, I don't want that to interfere with the morning session. So I only trade futures the power hour. So the last 1 hour of the market from 3 to 4 p.m. Eastern. That's the only times I am trading futures. So I finish my morning session, leave lunchtime alone, do not touch the market, and then come back for power hour. I think works best this way because futures, in my opinion, are a bit more volatile than options. So I don't want to get caught either on that morning volatility. If it works your way, yes, you're making money, but there's more risk involved. So I'll leave it for power hour where I can control the risk a little bit better. Obviously for the morning session, there's a pre-market analysis that has to go on there. I'm trading also tech stocks, so the Teslas, Amazons, Googles, all of that. This morning I only traded the Google downside play, and that was it, one and done for the day. So there has to be a bit of an analysis aspect to it, right? I have to understand, okay, which stocks could I be trading today if it's not the S&P and Nasdaq. But power hour futures, 90% of the time I am trading the Nasdaq. When there's days that tech isn't moving so well, I could trade the S&P as well.
Okay. So, homework is of course, and preparation is always a must. I don't get to play at recess unless I do my homework. So, but trading options in the opening session and then trading futures in the evening session, when you're overseas, it gets pretty late for you to do that.
It gets late. I was doing it during the summer, and I was 3 weeks like Europe time, so it was 3:30 p.m. for me on options, and then 9 p.m. when I started the future session. So it interfered a bit if I wanted to go out at night, because from 9 I had to stay until 10 p.m. But I managed it well.
And what do you do when you're overseas and you're not actively trading at night? You go out, you go hang out, go to a club.
Yep, I try. Yep, I try when I'm overseas. I try not to stay a lot in front of my screens. Like when I'm at home in New York, I'm gonna be in front of my monitor whether I'm trading or not trading. I could go to the gym or take a walk, but most of the times I'm in front of my monitors. When I'm on vacation, usually I'm only there for those 2 hours. So the first 1 hour in the morning, first hour in the afternoon, and then the rest of the day, I'm just enjoying the place that I might be at, right? So either it's, exploring new restaurants, which I love doing, or just, seeing new places, which I haven't seen before.
So we were just talking in Topstep TV about what do you do after having a bad day? Where a lot of folks were talking, and our risk manager Mick was talking about, and a lot of friends of mine on the trading floor. We always said, if the going gets tough, the tough go out to dinner. And after having a bad day, Mick was saying, we should probably do something nice, maybe get ourselves a nice meal, a nice steak dinner, something like that. What do you do at the end of a bad day?
It's gonna depend how bad it is. If it's bad that I could manage, then I'm just gonna occupy myself with another thing that I can do a small achievement. So accomplishing something else that I can just pat myself in the back with. If it's a bad day, like bad day, it's a cold shower.
They say that that's really good to kind of shake off a lot of the emotion, and I call it venom that we put in our veins after a bad day. I have not tried that. I'm a little bit old. I'm afraid I may give myself a heart attack if I get too cold of a shower. But I'm hearing that the benefits of that are really just kind of coming to light. It's amazing that you just said that.
Yeah, it's like clicking the reset button.
Yeah, that's great. Strengths, weaknesses. We all have them. Trading will certainly bring out your weaknesses. Can you pick one or two of each that you would address or attach to you as a trader? Let's start with strengths. I like to stress on the strengths. and we'll work on the weaknesses later. So what are your strengths?
Strength, I would say patience and risk management. Whenever I talk to people, I tell them the only thing that's kept me alive all these years in the market is my risk management. Everyone that has traded with me understands that the risk management part of me is like the biggest kind of strength I have, like the biggest arsenal in my trading tools. So that's part of it. And then patience as well. Very patient with the setups. Just gonna wait for what I'm looking for and not just trade anything. A good day for me is if I take 1 or 2 trades. That's it. If I'm taking more than that, it's not gonna end as well. When I see myself taking 4 or more trades, it's not gonna be, the ideal day for me. So 1 to 2 trades is usually enough because I'm just waiting for those right setups, sizing accordingly on those, and that's it.
Okay, so biggest strength, risk management. Probably one of the most important strengths to have in trading, right?
Yeah.
Trading close to points of invalidation, looking for asymmetric opportunities, all of those. What about a week?
Especially with futures, especially like I'm not sure if people have transitioned or will transition from options to futures as well. But to me, that was the biggest thing with it is understanding that risk is very, very different when it comes to futures trading compared to options. Because options, I know if I enter a contract that's $1, I'm going to lose that much. For futures, 1 contract could wipe out your account completely. So definitely, honing in a lot on the risk management part.
And you probably aren't writing too many options, huh?
Not as much, no.
It's a tough risk management for that. What about your weakness?
The weaknesses is one, being able to stop when I have those days where, it goes over 4 trades, right? It happened to me yesterday. We had a crazy winning streak last few weeks. And then yesterday it happened exactly that. I think I took in total like 6 trades within that power hour, within the 1 hour, which was a lot. And we ended up being red on the afternoon. So being able to walk out on days like that, I have seen it be a bit more difficult. I started red, I went to the green, red, green, and I could have ended the day down only, $250. It ended up being close to $1,000 just because I didn't walk away, even though I understood that I had already took more than 4 trades there.
So let that be a lesson to all of you. If you think you're over trading, you are. Now, your time frames, as far as trading options, your time frames, I understand, might be a little bit different than trading futures. If you're only trading futures for that last power hour of the day, what time frame charts, tools, and how long are you staying in those trades?
Yep. So ultimately, you always want to have the bigger picture there. So I have always 3 charts open. It's going to be 1 minute, 5 minute, and daily, because I always want to understand what's happening on the daily chart for me to make the best day trades, even if it's going to last me a few minutes. Okay. So always have that there. And then I use the 5 minute for a confirmation. And then always my entries will be in the 1 minute. I don't like to stay in a trade for more than 10 minutes. And then going back to my rules, if I see myself staying more than 10 minutes, again, it's not my ideal setup. I should probably just exit that while I'm on time.
So you've got a little bit of a time stop to the length of the trades you're going to.
Yeah, because I've come to the understanding, especially with futures, the entry is more important than the exit. Because if you enter at the wrong time, you could get stopped very quick with the volatility that we see these days. So I've come to be more patient with the entries because I could be right on the bigger setup, but then get stopped a few minutes before that move actually happens, which probably happens to a lot of people.
Oh yeah, it happens all the time, and it happens to me still. I've been trading for 30 years, and sometimes my trade location isn't as good as it should be. Do you base entries on where your risk level is? Where is the invalidation for that trade? If price comes here, this is where I'm out. Now I start to look for a good location, see if the market will give it to me.
Yes, always. Not just for futures, but options as well. A trader should always understand how much could this asset class that I'm trading pull back before actually moving again on the same position. If that pullback is too much for me to handle, I'm not entering because it's not the ideal entry, right? Because if I enter, pulls back to that point, bounces back again, now my mindset is just messed up now because I knew it was going to do that, and then I just got stopped because it was too big for me to handle.
And if you're recognizing that the stop maybe a little bit further than you originally thought, do you ever think to try and just get in at better trade location?
Yes, always wait for a better trade, for a better entry, or just size down, right? If you cannot handle the risk of that pullback, just size down. I've also built a small kind of tool on TradingView as well, where it shows me how much I'm risking at that moment of entry. So not just looking at the chart, but also looking at the table tells me, okay, is it enough for me to enter here? Like, should I enter like full size, half size? And that's how I make a lot of my sizing positions as well. Because the market is always volatile. Just because you're entering with 5 contracts right now doesn't mean the volatility will be same in an hour or two.
Right.
That's why the stop losses should not be the same either. Because 10 points in the morning is nothing, but maybe during lunchtime, 10 points is a lot for a stop loss on NQ, for example. So always start looking and observing the market, how the volatility is changing, so you can adjust your position sizing as well.
And just for maybe some of those newer traders out there, what KV is talking about is adjusting his position sizing according to the risk on the trade. If the risk is greater, size down. If the risk is smaller, you can trade a little bit bigger parts of your part of your package. If the risk is bigger, take a smaller trade. Take fewer contracts on it. If the opportunity is closer to risk, base your trade sizing on the overall risk of the trade per contract, right?
Yep, that's exactly it.
All right. Let's take a deep breath. And what do you like to do outside of trading?
It's number one, traveling. Again, gym is always intertwined with trading. You have to keep your body in shape. You have to keep in mind your shape in shape as well. And that's how everything correlates together. There's been times that I just stayed in my chair all day, and productivity, not just in trading but overall, just kind of decreases. You're not breathing fresh air. You're not seeing what's happening out there. So going for walks, going to the gym definitely helps. And then traveling is needed because trading all year is definitely there's pressure to it. There's pressure to it, especially if you're day trading. If you're someone that swings or holds more, it's not as pressure. But if you're day trading and scalping, there's a lot that goes into it. So taking breaks, either if it's at a week, even if you're not traveling, can travel, even just not trading for a week or two, it helps. It helps because you just put yourself in another place, and when you come back, you're completely refreshed. You're ready to go again. So I'm taking usually like 2 breaks a year, and even during those travel times, there might be a couple of days that I'm not trading either. Basically, I'm like, okay, these days I'm just gonna fully rest. I'm just gonna fully be on vacation, and that is it.
Just walk away from trading for a little bit. I find that's helped me quite a bit in the past. If I hit a losing streak, if I hit something like that, I find that I'm really just focusing too much on trading, on the charts, and just too close to the tree to see the forest. Getting away for a little while, clearing your head. It's such an important thing to do. And thank you for pointing that out. I was looking for like hobbies like needlepoint or something like that. But you've got bigger aspirations, like traveling.
Hoag, I think one of the benefits to why I'm kind of still here is just because I knew what I wanted to do from a young age. So it's not like I switched. Okay, I was a doctor and then I became a trader. There are a lot of stories out there, and I congratulate people who do that because it takes a lot of courage to switch industries. But I think one of the benefits to me is I started way earlier, and I just stick to that. So like whenever I look at charts and all of that, it's just like kind of what do you call it? Graphic memory. Where it's just, to me, it's like reading a book. So that was one of the benefits. I didn't have any, needling hobbies or dancing, classes, but I could go like to a concert. I was to a concert last week. Like I like to do things outside of trading as well.
Sure.
But I've kind of switched. I've kind of like split the time. If I'm in New York, I'm trading. If I'm out of New York, I'm going to be on vacation and doing other things.
All right. Excellent. We're going to move, after a little bit of a break about trading, we're going to move into emotion. Now, you said if you've traded 3, 2, 3 in futures, that is, at the end of the day, that's about it. But if things aren't going well, you may have a tendency to continue to take trades. What do you do about recognizing when you're in that emotional state and being able to walk away, which is so difficult for everybody? And, how do you, we can't really necessarily control emotions for very long. It's how we respond to them that is most important. What is it that you do? Do you take your mouse and throw it out the window, or?
The problem with that, Hoag, I recently started using a Stream Deck as well. So even if I throw the mouse, I still have the buttons to click there on the hotkeys.
On the hotkeys, there you go.
But first thing that I would recommend everyone doing in those situations, if you have a sticker, like a sticky note, put the sticky note on top of the P&L. That's the first thing, because that is going to just kind of zoom you out and actually look at the chart. And if you don't see any setups without being, impacted by your P&L, then, take that trade if it's there. If not, then sit on your hands. But I think that's the first step. Apart from that, it's very difficult to kind of switch your mindset while you're trading live. And I tell people, you're a completely different person well, once the market opens. You could tell yourself, I'm a good risk manager, I could do this, I could do that. 9:30, market opens, all of that gets erased. So a lot of the good traders that we have here as well, they have sticky notes in their monitors to remind them of things, to remind them when to walk away, to remind them of what's a good, profit target on a day, to remind them of a lot of things, because, as I said, you forget a lot of your rules. The rules that you just put either like half an hour ago, you forget about it once you open a trade. Once you click that buy or sell, everything goes away. You're just looking at the P&L and the chart.
And we always say around here, we don't get any smarter once the trade is on.
Yeah, no, definitely not. It's just downhill from then.
You're right. People change markets, but markets most certainly change people. Once you have that feel of skin in the game, that risk, man, everybody hates to lose.
Yeah.
Everybody hates to lose. But in avoiding it, we create bigger losses. Everybody loves to win, and loving to win, sometimes that causes us to cut winning trades, keeping us upside down in reward over risk. Is this something you've thought about, worked on, and that you teach your people? Is you're not wired to succeed at this. You got to switch it. You got to cut losers. Know where you're wrong and get out, and then understand over time when you may have a better situation, an asymmetric opportunity, as I like to call them. Small risk, big rewards. Stay in those. Let them play out. Do you think and teach that?
Yeah, so a lot of the traders that I've worked with have both of those problems, but everyone has them like different. Some of them like can hold winning trades but can't hold the losses, so they're there evening out, and the other ones cut the losses but still cannot manage to let the winners run. So if you see yourself struggling, you have to dig deep into what actually you're struggling with. And that's why I tell people, keep a journal, keep track of things, because you want to understand, just because you lost money this month, that's not the end of the problems. You have to figure out why. You have to figure out the why for the next month to be better. And if you're not keeping track of things, there's literally no way in this world that you're going to get better the next month. Because what are you going to fix? Are you going to fix, holding trades too long? Are you going to fix your win ratio? Are you going to fix your risk management? Are you going to fix, your holding times? You don't know, because you didn't look at the data. So have the data first, because without the data, we are just talking, having a conversation without actually looking at the facts there. Women lie, men lie, numbers don't. Right, Hoag? So
that's right. And I think most of the people we talk to that say that they're actually doing a journal and being accountable to all this aren't.
it changes a lot once you see stuff actually happening there. Because you might have a good win ratio, so that tells you, okay, you don't have to be more selective because you are already selective. You're hitting the good trades, but maybe now you have to risk the R&R, right? Maybe in terms of that, now you dig more deep. Do I fix the winning trades or the losing trades? So there's levels to how deep you go into the trading journal, not just typing it in and forgetting about it. You have to learn and acknowledge what's happening and be honest with yourself. If you're not honest with yourself, you're not going to become better. Like there's as I said, there's no way you can become better.
So important. That point that you just made is be honest with yourself and actually do the work. This is a difficult thing to do. You can watch charts for 10,000 hours and not learn a thing.
Yep.
It is that accountability of keeping track of your performance, understanding what trades were taken in your strategy and outside of your strategy, because how are you going to find out if a strategy actually works if you don't trade it?
Yes, exactly. Especially if you're switching strategies, right? You have to understand, is this doing better or is this doing worse, and why?
Now, speaking of strategies, to me, as a discretionary trader, strategies are fluid, they're dynamic like the market. So, if there's a strategy that works when the market is largely range bound and we go to a directional move, there has to be a change in the strategy.
Yes.
Right? So just kind of as simple as, buy the low, sell the high in range bound markets. And when it breaks out, you go with the breakout. Simple strategy, maybe not so easy to follow, but when you see it happen over and over, and there's accountability and planning for it, and the hypothesis for it, and then watching it play out, you got to learn to trust it. And you said one thing you said was honesty. I think humility is a big part of that, to understand that the markets are bigger than us. The next thing is trust. Learning to trust the fact that maybe you are smart enough to do this. That's a big step for a lot of people. How do you help them? I mean, there's journaling, there's all that. We can say over and over again, trust your strategy, plan your trade your plan, all of those colloquialisms and idioms that traders use all the time. But when it really gets down to it, if a trader doesn't trust themselves to be able to find good levels, what do we do about that?
Well, here's the thing. All the things you said are connected, right? So the journaling, all of that are connected, but they will not work until one thing is done. Is understanding what type of trader you are, right? Because if you don't understand yourself, there's no strategy that will help you. There's no journal that will help you either. I've taught a lot of people similar things, and the strategies may be similar, but the way they manage their trades at the end of the day will be different because they are different people. So you could have the best system in the world and not manage to make it work because that's not you. That is not you. Maybe you are someone that likes to hold longer. You are someone that likes less volatile markets. You can trade the ranges. Some people cannot trade the ranges. If you can't, then just do not trade for the day if you cannot trade the range. So unless you understand what markets can you trade and you cannot trade, it doesn't work out as well, because you're going to see yourself being in market days where you shouldn't even be there to begin with.
More of an impulsive trading day than an intuitive trading day if you're not in the right trading. And I agree with you. Some people trade certain market states better than others. There was a question here, and I had and it just flew out of my head. What was it? Oh, it'll come back to me. It'll come back to me. So, your end of day review. Sometimes when you're overseas, that end of day review happens at 10 o'clock at night. Do you kind of review each trade you took and kind of think about what you were thinking and what you were looking at, how it came out, how you may have found something that may have provided a better outcome for you, whether it was a loss or a win? how do you wrap up the trading day and then get moving on and look forward to the next trading day?
Yep. So again, as I said, on most of my days, I'm only taking 1 to 2 trades a day, 3 maximum. So it's not going to take me as long to put those trades in the journal. And people think it's going to take a long time. It will not. The only thing it takes time is for you to sit yourself in the chair and actually start. The starting is hard, but once you start, it's only going to take a couple of minutes to finish it off, unless you're taking, 15, 20 trades a day, which then it might take a bit of time. There's a couple of things that I add into my journal instead of just the entries and exits. One is going to be a rating factor from 1 to 10. Is you rating that trade, and you just got to be honest, right? The honesty aspect goes into that. Just because it was a winning trade doesn't mean it's a 10. You could have been lucky on that one, so it might have been a 4. Or just because it's a losing trade doesn't mean it's a 1. Maybe you followed your plan, you managed the risk. It could be even a 9, because there's going to be times that the market just doesn't work, right? You followed your plan, you followed your strategy, you managed the risk. If you did all of that, it could be a 10, even though it's a losing trade. So the rating has to be important there, and then always put the notes section there as well. If you want to attach an image to it, definitely do it. But add the notes, because on that day you can add the notes. But I always recommend going back to the weekly trading journal, like that you did throughout the week, in the weekend as well. And unless you have the notes, you can't really think what happened during that time. So the weekend preparation, in my opinion, is a lot more in depth and more intensive. That's where I go over my past week, and also I'm preparing for the week to come.
For the week ahead. Really one of the most important things I think you said there, and there was a lot of important things that you said there, was starting is the hard part. If you sit down and do it, it's not going to take long. You don't have to write a novel. Write down enough just to remember what happened, what you were thinking, what the outcome, the process to get into the trade. It doesn't have to be a book, and I'm a pencil and paper kind of guy. So I always have this here, got my pen in my hand, and I'm not a very active trader too. I mean, if I take 3 to 5 trades in a given market on a given day, that's it. If any more than that, I'm starting to overtrade and probably getting emotional. And when I get emotional, that's my signal. Okay, you're done.
Yep.
You're done. Even if it's emotionally to the upside, I'm done. I gotta have a clear head to sit down and trade with. So, getting close to the end here, anybody that is looking to grow as a trader, KV, you're obviously much younger than I am and in much better health, and doing the workouts and taking the cold shower and looking at a 1-minute chart. Oh, that gives me heart palpitations looking at a 1-minute chart. So, but anybody that's looking to improve as a trader, what would be your main point of advice, or what would you tell them to do first?
Take it slowly. Right? Take it slowly, especially if you have the time. Take it slowly, because if you rush the process, it's going to take even longer than you thought. I've talked with people that have been trying to make trading work for 2 years, 4 years, 5 years, even more. And it's all because they rushed the process. They skipped a lot of steps without actually learning first. So if you actually do the learning first, what I've seen with other people, it should not take more than 6 months for you to complete the learning process. And after that, it's just a game of optimization, working on what's not working, doubling down on what's working, and so on.
And getting in your head.
Yeah, exactly. But the learning process, if you're doing everything properly and taking the time, 6 months, you should be good. And then obviously the market is always changing, so you're always, absorbing more information from the market. But getting down to the basics, getting down your strategy, 6-month process, that's it. A lot of people cannot wait 6 months. They want to start the funding challenge now. They're going to get funded in 2 days, and they want to get paid in a week, and they end up never getting paid in 6 months whatsoever. So
they think it's a sprint and not a marathon.
Exactly. So the market is going to be here. It's going to be here tomorrow. It's going to be here the next week. Take everything slowly, and it's going to end up you're going to end up achieving your goals much quicker than you even thought at the beginning you would. Everything adds up, especially compounding consistency, right? We talk about compounding in terms of like long-term investments, but compounding consistency, doing it every day, bless you, doing it every day. A lot of people that have come across me have told me, okay, I've been in the markets for 5 years. And maybe during those 5 years, they took 4 years of break. They were in the market 1 month and then next year 1 month. That's not consistency. It's not 5 years into the market. You have to be here every single day, especially with the volatility that we see these days and how markets are changing. You have to be here every day. And if you are doing something every day and doing it properly, managing, and tracking everything, there's no way you won't become a better trader in 6 months. Like it's not possible, because you're there every day, you're keeping track, you're managing your positions, you're doing everything right. So whatever, not just trading, whatever job, like if you do something like 6 months, like if I start painting 6 months straight, I'm going to become a good painter in 6 months, even though I don't know anything about it now. So that's how trading works as well. But a lot of people skip a lot of steps just because the barrier to entry is so easy.
So many good points there, KV. One of the first ones, consistency brings consistency. So many traders have come to me and said, Hoag, all I want to do is just find consistency in the marketplace, to which I answer that with a question. What are you bringing consistently to the market? Your homework, your journaling, your accountability to all the things that you're doing, your continuing education, not only about markets, but about yourself. If you're not doing those consistently, how can you expect to be a consistent trader? How can you expect anything consistent out of the marketplace, which is markets are not consistent. They're fluid, always changing. And everybody seems to think they're going to get into trading. Maybe they know somebody who's become a successful trader, whatever it is. And believe me, I've known a lot of very successful traders. And if I ask them, what did it for you? They can't really say it, because there's something inside of them that has changed as far as the wiring of their brain is concerned, or whatever it is that put them in this place. And a lot of folks just want this to happen fast, and they end up slowing the process. Fast is slow, slow is fast in this. The thing you said about building a foundation of knowledge and adding to that foundation of knowledge, to me was perfect and genius to some degree, right? It's this is very difficult to do, and a lot of folks think, well, I'm going to be the one, I'm going to be the awesome trader forever, and you learn quickly it's not that easy. I mean, you're up against a lot of really good traders out there.
It's not. It's not easy. Everyone can have a lucky month, but to me, consistency, and this is how I kind of measure it. If you can do something 3 months straight, like if you can achieve, like if you have a goal of making $5,000 a month, if you could do that for 3 months straight, that's consistency. And that's where you can start sizing up. You can start, whatever. But unless you have that 3 month, at least 3 months consistency, you don't have the consistency yet. Everyone can get lucky.
Absolutely. And, that's part of it. You press the right button and the market goes your way. Is there any real thought behind it? Anybody can get lucky. You're so right. As far as consistency is concerned, I've worked with a lot of traders, and, of course, you have to tell them that there's only so much anybody else is going to be able to do for you. Your outcome here is 100% dependent on you and the things that you do and the things that you learn. To me, if in 6 months, a year, having a financial or a time-based goal, like I want to get through the trading combine by the end of next week, works contrary. I want to make $500 or $5,000 a day, works contrary. You have to be able to just accept what the market is giving you. And if you can maintain an account, stay in an account for a long period of time, there's a degree of success there that buys you the time to continue to get better at your craft, understanding how markets work, understanding yourself. If you are, demanding a certain amount of money by a certain amount of time or a goal like that, those goals to me tend to work the opposite. I mean, I've had daily profit goals, and I've been that close to it, and said, let me get that last couple of ticks.
Yep.
Boom.
It's happened. It's happened to me as well. It's happened to me as well.
You're a trader. It has to happen. Otherwise, we don't learn. But we can try and help others learn from our experience, right?
Yep. Yeah. 100%.
Well, KV, I can't thank you enough. Are there any final words that you want to talk about? You want to talk about your website, your next vacation, starting in your new career in needlepoint?
Yep. So if anyone is just beginning their futures journey, I'm making a class next Tuesday at 7 p.m. Eastern. It's completely free. It's going to be 2 hours long. I'm giving away my risk management indicator and also my risk management track sheet, which shows you how many contracts you should open, all of that. So you have all of that jotted down. So if anyone is just starting out or having trouble, I'm hosting that class next Tuesday. And it's simple. If anyone wants to sign up at futureswithkv.com/class. So futureswithkv.com/class. It's completely live, completely free. No strings attached whatsoever.
Futures with KV. The letters KV.
The letters K and a V. Yep.
.com/class.
/class.
And what's the date and time on that?
Next Tuesday at 7 p.m. Eastern, October 3rd, I believe.
Okay.
It's not pre-recorded. It's completely live. So people have questions, happy to answer them during that live session as well.
Awesome. So that's futureswithkv.com/class, 7 p.m. next Tuesday, October the 3rd, 7 p.m. Eastern time. That's 6 p.m. Central.
Yep.
And we'll look forward to being there and seeing all of you there. And we will talk again soon. I'm looking forward to seeing you again, and hopefully very soon, KV. Thank you.
Yep. I hope everyone learned during this last 1 hour. So
I know I did.
I'm happy, Hoag. I learned a lot. I mean, you have more skin in the game than me, so.
Well, we'll talk again soon, and looking forward to enjoying our processes together along the way. So, trade well, my good friend. And if you're traveling anytime soon, travel safe and let us know how things are going. And we'll look forward to seeing you. futureswithkv.com/class.
Yeah.
All right.
Thank you, everyone. Stay green for the day, stay green for the week. Also, end of Q3 this week, so hopefully everyone ending that on the green too.
That's a good point. Yeah, be ready for that. Anything can happen. ACH. We say that a lot here. So thank you again very much, KV. We'll talk again soon.
All right. Well, thanks to KV. We're going to take a minute break to switch around here for group coaching with Robert, and we will announce the 5 winners from Top Quiz just before that. So Robert can get it at noon. Thanks again. Enjoy the smooth jazz for a few minutes.
We're good?
Hello, everybody. As promised, Hoag and I are back to announce the winners for our random competition. You ready, Hoag?
Yay! Ready.
Yay. Yeah, I'm excited too. So we have the list here of everyone that played. There were 388 of you today. We'll pick 5. So I'll go over to my random integer generator and get those numbers. We got from smallest to largest 52, 113, 239, 270, and 386. All right, you want to see who those are, Hoag?
Yeah, let's see.
Okay.
The winners.
At 52, we have Jiggy, getting jiggy with it indeed. At 113, we have... Sorry for giving away where people finish. At 113, we have Edvin. Congratulations, Edvin. 239. Co-ed Naked Yoga. Spicy.
Co-ed Naked Yoga.
Congratulations.
Sounds like
all right.
We do on the weekends.
Definitely. Hard to keep that up on a weekday. 270, we have Jay. And then there's one more left.
All right. A drum roll for last one.
386 is Roe. All right. Well, congratulations to those who won today. I'll be emailing you. In the meantime, we're going to take a quick coffee break, and then we'll have Robert and Eddie on for group coaching and taking small wins. It is going to be a good one. So we will be back in just a few.
All right, we're back in the saddle again, and we've got Robert with us. Robert, aka former stat guy, but the professor. I like to call him the professor because his knowledge is impeccable. So, Rob, what do you got for us today?
Well, I'm still kind of the stats guy, just behind the scenes. We do all that preparation for the night before and get everything ready, and obviously with the help of the back office, a few other people inside of Topstep really helping out. Everybody's got a hand in these things, and it just works. It's like flowing like a nice machine. But so thanks for everybody that's on the team. We're still doing them. We're still kicking them. We got some more stuff coming up.
Awesome. So,
all right.
Taking
hey, look at that! I got a message
wins.
from. Yeah, taking small wins. That's kind of my style when it comes to trading and coaching. And I actually brought up some notes I'm going to keep up here on a screen for those listening. And first thing I want to start with, we didn't put this up there yet, Eddie, but I want to make sure that this is clear, that this is my own opinion. This is not trading advice. They're my own thoughts. And yeah, there we go. Hey, look at the chart. I love it.
All right.
Excuse me. Yeah, it's taking the small wins. We always hear about taking base hits and they add up, right? I think Dan, when he was doing one of the cruise segments, had a great line. He said, the only way to hit a grand slam is to get the bases loaded with the base hits first. And I could not agree more that it's exactly it. I am notorious for taking these small wins, small pieces along the way, not looking for the big runners, not looking for the, quote, big move, because if you look for the big move, you need to have a big drawdown, and we know we don't have that much room to play with. The stops are pretty tight, and that's by design. We want to make sure that you're getting out of those trades that aren't going your direction. So that's kind of the theme of this particular segment right here. Is just, how do we do that? How do we make it work for us? There's comments are in here on YouTube, so I think you're looking at those, Eddie, in case anybody wants to jump in and ask specific questions.
Right.
Until
questions
then,
are open. Yes. So
yeah. And it looks like we're getting up there. I'd like to see 1,000 likes coming in too. That would be wonderful. I don't know who. I didn't hear a little bit of the morning show, so I don't know who's on the chopping block of what funny costume they have to wear next. But I think 1,000 likes would do it for sure.
We'll think of something, Rob.
We'll think of something. Let me preface this. Even before that, thanks for the last guest. That was a great conversation. I love listening to the guests that come on here every single time. I learn something else about trading, about myself, about programs, about the markets. It's just unbelievable. I can't keep this show on, even if I'm not on the show. I have it on my phone, sitting here listening. It's unbelievable. So, thanks for all the guests that come on here, and that lesson was really something. Eddie, moving along here. I work with a lot of traders with coaching for Topstep, some stuff outside, and working with the pros that are inside of Topstep. Working with, seeing Mike in the morning, MP, Michael Patak, if you don't know the name, seeing you do stuff, watching Hoag, Dan and Mick, and how they're all talking about these other traders. And I let me preface something here that I'm an outlier. So a few of the things I'm going to talk about in this segment, they're not going to go against what others are saying, but it's just my own little take on things. Okay, so let me be very clear about that. I agree with a whole bunch of prospects. You got. I've been trading 6 years full time in pro with my account, and you guys have been trading for 30 plus years. There's always something to learn. I just want to be clear. The way I look at the markets, it's a little bit of an outlier, and it's different than most traders. And it fits right along with the theme of these taking small wins. Okay? My focus is on philosophy more than it's on psychology. Right? We know psychology has a huge aspect in trading. It has a huge impact in trading. So how do we take the biggest facet, the biggest item in trading that can cause us the most damage, most harm, and remove that from our equation? Well, my answer for me specifically is to not worry about what the market is doing. I don't know what it's going to do. And we're talking random chaos here. I'm good with statistics and math and analytics and all that other stuff and, algo things. We can't figure the market out, right? We have traders for 10, 20, 30, 50 years on Wall Street with multiple PhDs in economics and statistics and mathematicians and physics and all this other stuff, and they can't figure the market out. What makes me think that I can do it better than them? I can't. So what I do is don't try to figure the market out. If that makes sense, hopefully that makes sense to the viewers here watching this, because the biggest impact that I've found for trading of trying to go for these big moves and these big wins and these long, to me, it just never worked for me. I came from trying to trade stocks in the past, dabbled in options just a little bit, did not understand it. Did not understand it at all. I got destroyed. Like everybody else that starts the market for 8 solid months, it was loss after loss after loss after day after week after month. I got so beat up with this thing. And then finally somebody came to me and said, man, I think you got some good stuff there, and you see the market, pretty sharp and understand this. I just think you're trading the wrong stuff. I was looking for those big wins. I was trying to catch these low float stocks moving and throwing 20,000 shares on a $3 stock and trying to catch the minute candle at the open and run it as a momentum. Hey, I'm not knocking it. There's a lot of traders that do well like that. I'm just saying it never worked for me, so I focused on the small pieces along the way. Okay. The way I do this is watching the waves. I don't mean waves like Wyckoff or anything, or Elliott wave theory. Watching is an ocean, okay? Probabilities of the ocean. If I have a level ocean, I got my hands up if somebody's not watching but they're listening, I'm at sea level. And let's say I have a 10-foot wave, and then it comes back down to sea level, and then a 10-foot trough, it comes back up to sea level, and it keeps doing that. Well, every once in a while it goes to 9 and 9.5 feet. Sometimes it goes down to 5 feet. But on almost all of those occasions, the waves move between 2 and 5 feet. If it only goes up to 1 foot, I'm not going to ride that wave. If it goes down to 15, I'm getting out at 10. And that's what I mean by these smaller moves. The market's going to move and fly around. One thing, we can't guarantee what the market's going to do, but one thing we can guarantee is it's not going to stay still.
Right.
It's not going to stay in the same spot. We see Hoag put the 1 minute opening range on the chart. That's a great idea. Why? Because after that 1 minute candle plots, you can pretty much guarantee that the market is not going to stay within that 1 minute candle time frame. I'm going to say 99.9999% sure that it's not going to stay in that 1 minute time frame. So you have an option there. You can take pieces out the top, pieces at the bottom, pieces as it goes back and through. Right? That's just my philosophy, the way I look at it. Do I know why that happened? Nope. Do I care? Not in the least. If I'm worried about news, stay flat. Market's open. We're trading futures. Market's open 23 hours a day. You can trade 22 in Topstep, in the Combine, or in the XFA, or live. We can trade 22 hours. If it's flipping around and going crazy, stay out. There's your risk management. It's a very, very simple move. I have nothing to worry about in psychology at that point. Oh, there's news. I guess I'll take a coffee break. Oh, Powell's speaking at X time. It's around my lunch. I'm going to grab some lunch. That's the best way that I know of personally for myself, and that's what I share with when I'm coaching. Is let's remove all the bad news. Let's remove those variables that can come back and bite us, that are stingers. Philosophy different than psychology. And I did write those definitions down here. Philosophy is the study of the fundamental nature of knowledge, such as academic discipline. It often relies on critical thinking, logic, abstract reasoning to analyze concepts and ideas. Right? It's philosophy. It's like, what we think is going to happen. Psychology is a study of behavior in that given context. It seeks to understand how the mind works, including cognition, emotions, motivation, and behavior. So philosophy is, yeah, I'm going to think about this. How is this going to go? And psychology is how you react to how things went or didn't go. So if I can remove that piece of it, think of that. I would never have to worry about psychology again. If we just focus on philosophy and we just say, oh, hey, this is what I'm going to do, bar none, win, lose, makes no difference. Takes the psychology out of the picture. Do you have emotions? Absolutely, of course. You get those wins? Sure, feels great. Celebrate it. It's not easy. You get those losses? Yeah, it hurts a little bit. Feel it, let it go, move on. Eddie, you say something about this where you look at it as a bus, right? If you miss that bus, you miss that trade.
You got one right behind it.
There's one right
too,
behind
Robert,
it.
Is, I mean, you know, like you say, you know, we get bit, and I usually like the term once bitten, twice shy, where, you know, if you do fall in that category where you do get hit, realize that, write that down, journal it, know that it can happen again, and try to avoid it as much as possible.
100%. We talked about when we were doing the Coach's Corner stuff prior to TopstepTV. I remember you saying that, and that really stuck with me too. I use that analogy quite a bit about the buses moving along, and there'll be another one coming along.
Of course, run with it, kid. It's yours.
Run with it. Are there any questions that we need to go over before I move on to?
Well,
it's all on the same topic, taking small wins. We're going to keep building on it, but sure, go for it.
Right. Any questions you do have, please post here. Richard Blake wanted to ask about ATR. How do you adjust size based on ATR, and do you recommend doing that?
That's a tough one. It's a great question. I appreciate it. Think of what the ATR is. What does that mean, right? It means, for those that don't know, it's average true range. And how do we get that average true range? We have to look back at what the market's doing. We call that periods or candles, right? So if I am looking back, let's say a 10 period, and I'm looking at a 5-minute chart. I think that's what's on the screen now. It's a 30 on the screen now. Excuse me. But if I'm looking at a 5-minute chart that I'm trading on with an average true range look back of 10, I'm looking back at what happened in the market in almost an hour ago. My personal opinion, again, this is all me, no disrespect, it doesn't matter. I don't care what happened an hour ago, honestly, because it's not going to affect what I'm doing now. Why? Let's give an example using that ATR. I have an ATR of 20, for example. It's looking back. It's got those last 10 periods. But the next 10 periods are 4. Guess what I'm doing? I'm trading, my trades are based on a 20 ATR when the time I'm trading it was 4. Does that make sense? So that's what I look for and don't look for when I'm using ATRs. I honestly don't use it. I'm not pushing yes or no. I'm just explaining what it is. And that's just how I look at it. That is my philosophy. That's what I look at. If I'm looking at a 20 ATR on a 5-minute chart, that's 100 minutes. That's talking an hour and a half's worth of time. Now, let's say I'm trading the market open. I'm trading 15 minutes into the market open, and I'm using a 20 ATR. So I'm looking back an hour and a half, which is an hour and 15 minutes before the market open, and I'm trading the market open, which is entirely different than the last hour and 15 minutes, and I'm going to get destroyed. So one of the lines I put in here, my notes here, was take time and context into account. This is a perfect example of that.
So
VWAP is, go ahead, Eddie.
I was going to say, Matt's saying, so you're advocating for a shorter time period ATR.
If I were to use ATR myself, yes, I would use a shorter one, for example. I would also suggest using it in the context of the market you're trading at the trading time. For example, like that example I gave, if you want to trade the first 15 minutes of the US market and you have even if you have a 15 ATR, if you're doing a 5-minute candle, that's still too far back, in my opinion. I would let that go a little bit, get that context built up, get some knowledge behind it of what's actually happening at the market at the time you're trading it, and then make a decision. ATR, yes, ATR period is the same as the ATR length. We do.
I know that laugh. Hold on a second.
I'm sharing my screen with you, Jack. I think you should be able to see it.
Hey, MP, how you doing? Been a while since I've been on with you.
Hey, what's up, Robert?
Doing all right. Doing all right.
I'm coming on. I think you can see me.
Yeah.
Coming on because I did put up a W today. I did.
You did.
$35. I was down. I was down 2,000, and I sat here.
Wow.
And sat here, and sat here, and sat here, and then as you can see, well, that's a screenshot of my screen, but I also am sharing my screen.
Oh, you want me to switch? You want me to switch to that? I see how you circled the 35.
35. I see that.
Oh yeah.
Holden circled that for you.
From being down 2,000, and then yesterday from being down in the hole and ending up 75. Scratch day. I like second best winning day is a scratch day, and yeah, I'm jumping in and jumping out, but I got this. I'm very, very happy right now. I hated trading today.
Here is your live charts, MP.
There you go. We're gonna get green stickies. We're getting green stickies or what? There, MP.
The blue ones are winners.
Put that in the budget.
Blue ones are winners. Yeah. No, this is a little sell-off that happened. I was short from really this whole sideways action with a fairly decent. This is 78, so I was short from 77s, 75s, and then I did the sell-off right here. And the only thing I did really wrong was put on more size up in this area. So I had a 7 lot on. I don't really totally like that, but it was setting up really well. And I was selling strength like we were talking about this morning. It did a little head fake now to the downside. It did a head fake to the downside. I was actually covered down here. So it's like more than 15 handles. It's like 20, 30 handles. And then, so I'm glad about it. So long story short, I'm going to leave you guys. Winning day, scratch day. I'll take the day. And you guys keep trading. But I'm going to jump out of here. Jack, thanks for bringing me in. Robert, Eddie, I'll let you guys go at it. I'm just glad I put up a W.
Glad too.
Awesome. You know what? I'm like, Mike, I'm glad that you're still calling it a scratch day, because even though it was a plus P&L, calling it a scratch, right? That's your second best day, because you're calling scratch days. If you were down 35, scratch day, up 35, scratch day. So I'm really happy about that. And
plus or minus 100, plus or minus 100 or 200. It's still a scratch day, but so far my scratch days have all been positive that I'm giving myself. But yeah, I wanted that one. I want to share with you guys. I'm going to get out of here. I am going to hit balls at the driving range now.
That was the plan.
Yeah, that was the plan prior. I'm going to continue that, and I just want to share with you guys that that grind.
Well, that's good. I was worried. I was a little worried about MP this morning. So
we got to deal with him tomorrow. Oh my goodness.
Well, hey, at least you're dealing with me a little more even keeled. But I'm going to get out of here. You guys keep going, and I'm going to keep tuning in.
All right, brother. See you, man.
See you guys. Yep.
All right, one more ta-da for MP.
You gotta, because that that wasn't a $35 win, because he was down $2K. So that's a $2,035 win, right? You climb out of the hole. That's what he came up with. Yeah.
And one of the things here in the YouTube chat, if you're down, and don't battle the market, just do your trading. If you find yourself battling, you're fighting the market. All right, you're putting yourself under too much pressure. Just do what you normally do. All right, be a trader, not a warrior.
Absolutely, Eddie. That's go with the market, and that's not the trend is your friend thing. That's just going if you can't say a trend is your friend if you're a range trader. If you love those bouncing back and forth and you're playing those opposites, trend isn't your friend. It's not. It's just you got to do what you want. If the market's working for you.
It seems like Ghost has a nice day, up $900 for the day. Here you go, Ghost. There you go. We got those are free. So, but yes. Go ahead, Robert. We've got some more questions here.
Sure.
Ash is asking, GPT is asking how to take a trade using volume profile. Do you take trades like that?
Yes. I have two things on my chart and two things only. One of them is an indicator that I personally created based on my trading style and what I like to look at. And the other thing is volume profile. I do not have volume on my chart. I don't have candle volume on my chart. Again, it's a personal preference. I think it is irrelevant, to be honest. It's just me. It's just the way that I trade. I also don't trade time. And if anybody's seen my charts, they know that. It's range bars. It doesn't matter to me how long a market stayed in one spot per se, but I want to know what happened when it stayed in that spot. If I'm looking at a chart, I'm just glancing right now. We're looking at a 30-minute chart on the screen right now, and I'm looking at, let's say, 1, 2, 3, 4, 5 candles back. It's a red candle. Okay, it's a 30-minute red candle. What I don't know, again, this is my opinion only. What I don't know in that red candle is, did it start at the top and hang there for 25 minutes and then the last 5 minutes fly down to the bottom and close? Or did it fly down in the first 5 minutes and then hang around there for the next 25 minutes? Static time candle like that, I don't see it. That's me. Again, I don't see that. And I like to know what goes on during that time. I want to see that price action. I use some range bars, and all they do is they plot when a certain amount of movement happens. Like I trade NQ, 40 range. It just means it's going to plot a candle every time the market moves up or down 40 ticks, which is 10 points, right? 40 ticks, 0.25 per tick, 10 points, just for those who aren't trading it. So every time the market moves up 10 points, it's going to plot a candle. Well, what if it moves 10 points in a tick? It's going to plot a candle right next to it, just a little bit higher, and then it's going to come back down. I may have 3 candles in a row, 1 green, 1 red, 1 green, right next to each other. Those 3 candles could equal 30 seconds in time or 22 minutes in time. To me, personally, it's irrelevant because I don't trade time, I trade price. I want to know when that market gets the hell out of that range. I know that it's ranging 10 points. During the US session, it'll go to 80 ticks, which is 20 points. It just moves further and faster. So if we use 10 points, we use 20 points. If the candles are just stacking up right next to each other, green with a little peak out the top, red, a little peak out the bottom, green, a little peak out the top, it's just ranging in roughly 20 points. Put an alert above and below. Go get a coffee. Come back when your alert goes off. No sense getting caught up in that chop. Again, It's just what I do, right? That's just the way it is. To answer the question about volume, because I want to get back to that, when I'm looking at the range bars, and I see them bouncing around back and forth, how much volume is coming in at that price level to do that? Sometimes it's not much. It means there's not a lot of buys, not a lot of sells. You know, if you're looking at market profile, and things Hoag does, look at the TPO charts. Other traders are market profile. We look at volume and bids and asks coming through. Volume profile is going to show you that. If you have a range of that 10 points, and that volume profile is just kind of like barely making, because volume profile comes from the side, if you all know what that is, and it's just showing you the number of contracts, the volume of contract traded at that particular price level. You may hang around that price level in that zone of 10, 12, 15 points, or 20 points, whatever it is, with not much volume coming in. What does that mean? It means it's not going to stay there long. There's no orders. Nobody's moving anything. Once it gets out of that area, you're going to see stop being run, or you're going to see new buyers coming in, or the other way around, right? Stops being run up top, sellers being jumping into the continuation on the bottom. My opinion, that's just what I'm saying. This is what I look at. That's how I use volume profile. It's only 2 things in the chart. Range bars, an indicator that I created for myself based on how I like to think and view my philosophy of the markets, and volume profile.
Yeah,
That's
Robert, another thing here is blockchain buck. This might be a question that everybody asks themselves. I was already beginning to question my decision. Just need a little push. Now, as far as decision-wise, my first question would be to Buck would be, do you have a game plan? This is something where, I know I've talked to traders regarding, have your actions planned out before the market gets there. So you're not a deer in headlights. Know what you're going to do when a market moves your direction. Know what you're going to do when a market moves against you. Have these already pre-decisions made. This way you're not going to be in question of, oh gosh, should I do this? Should I not do this? I'm confused. So set yourself up. Rob, real quick, it's like,
Sure,
I say, like, driving on a highway. Okay, you watch the car in front of you. Of course, you have to do that. But as driving, I'm always looking maybe 300-400 yards ahead to see if any brake lights are coming on. Then I know something's coming up, so I'm prepared in case that people slam their brake lights on or something happens. But I know who's in front of me, and I know what's beyond that. So keep that in mind.
That's great stuff, Faye, and thank you for taking a look at some of these. While you're answering, I was just jumping in and answering some questions in there as well, but I'll definitely touch on those. There's some super good questions here. They're asking about the small wins, right? Is
it Anthony?
Yeah, Anthony was asking about that. I saw another one up earlier, but just to clear up what this topic is about, this session is about, is I say small wins. I should say small trades because I'm not going to promote small. It's a small loss too. Okay, so the question was more along the lines of, do I use market structure for my stop placement? That answer is yes. It is unequivocally yes. I'm just really, like I said at the beginning, I'm an outlier. I'm different. I'm just sharing my philosophy and how I look at the market. So please, take it with a grain of salt. It is not advice. And I'm not going against what anybody else is saying because they're much better traders than I am. I may have, let's use an example of a 10-point target. I do my calculations and I say, oh, I'm going to trade right here, from here to here, and it's a 10-point move. My stop might be 8 points. It might be 12. It might be 21. Okay, I know that's a weird way of looking at it, but I just look at it as a market movement. It doesn't necessarily mean I'm going to wait for it to go, oh, I'm going to enter by a couple ticks on my 10-point target and let it go 20 some odd points against me. It does not mean that at all. I'm still managing that trade. But what I don't want to happen, I trade NQ, to be clear, what I don't want to happen is that thing to enter a couple ticks, drop down 12 points on me, bounce right back up again because it was hitting some average or bouncing off of a VWAP or the previous low or whatever the hell it wanted to do. I just don't want NQ to whip down on me, stop me out, and go right to my target. It used to happen to me all the time. So my stop is further away based on how the market is moving, and it's not based on any ATR or something. It's visual looking at the chart. When I'm looking at range bars, I can see exactly where the market is moving and how long it's there and how many times it's been there. Couple that with the volume profile on the side, you can see how much interest there was there. If it comes down and just has a little weak area that bounces up, down, weak area bounces up again, probably not going to stay there. If it drops down and there's a whole bunch of volume, might be something I may want to be concerned about. Taking a break. Say, wait a minute, I'm just going to sit this one out. Let's just wait and see what happens. Because why? There's another bust down the road. There's another trade is going to happen for you. Yeah. So that's the idea behind it. So yes, I do use market structure, but nothing specific. Not a moving average, not a VWAP, not anything like that. It just doesn't. To me, it doesn't matter. So how many times have we seen, high of day just been blown through, and how many times have we seen it bounce off to the tick and then tank the rest of the day? To me, it doesn't matter. I'm going to look at it, all right, it's around high of day, 50-50 shot. It's going to break out or it's going to tank on me. What is my answer to trading? Stop. Wait for it. See what happens. There'll be another trade.
Robert, let me ask you a question.
Yes, sir.
A lot of us, what you're saying is that you can basically brush things off your shoulder. The worry factor is very minor in your trading, but some of us really have that fear and that worriness and just trading. How would we eliminate that? What helps you eliminate that emotion where it's like, oh my gosh, I'm stressing. I'm stressing.
Yeah, great. And I'm a high energy guy, Eddie, right?
You are.
I do have that. Yeah, I do have that. So to answer your question directly, how do we combat that? It's time is the very first thing. Is time and getting comfortable with your system. If you're guessing and you're fighting the market, it's going to be a rough road. But you have to go through it. It's going to take time. You need to go through some of those pains to understand it. and to get it and be like, oh, this isn't working for me. That's why you have a practice account. Try it out there. Oh, I saw this YouTube video. This looks really cool. Try it on a practice account. Back test it over. I would say back test, but forward test. I don't like back testing, but rewind the market and do a forward replay so you're following it as it's moving along, not just run a back test sim thing. Do that on the weekend. That's your homework. When you're during the day, if you're trading during the day or if you're trading at night, whatever your trade time is, that's your time to trade. Don't be trying stuff at that point. That's your trade time. Work on the other stuff outside of those hours. It's going to help with your emotions. It's going to stop you from being like, oh, not again. It happens to everybody. It is nothing to be ashamed of. It's nothing to fear. It is going to happen. Think of the very first time you did anything, riding a bike, getting on a plane, driving a car, whatever it is. That first time, there's always some fear and doubt. Always. It's just part of human. Time takes care of that. You think nothing, get in your car now, turning the key and going 70 miles an hour down the highway. Think nothing of it. First time you got in that car, it was 1 foot on the gas, 1 foot on the brake, stop, go, 2 hands on the wheel like this. This happens to all of us. And that's what we do. It's the growing pains. But you have a lot of traders here. You have a lot of great coaches here. You have a lot of experience. You have a lot of resources. You don't need to go at it alone. There's Discord. There's a group channels in there. All the coaches are in there. We have 3-4 times a week. We have main shows coming up. Excuse me. Where it's just like this. We have coaching right now for answering the questions one-on-one. So it's going to take some time to get used to that, to get, I hate to say numb to it, but to not let it affect you as much. Is it going to still? Does it affect me still? Absolutely. I've just come to realize, I say like, yep, all right, it's a loss. I swung and missed. Next time I'll get a base hit. Sometimes I'll hit and I'll be, oh, look at that nice base hit. And it goes a little further than I want. I'll take that double. That's okay. That's just not me. That like the taking those small wins along the way. Okay. Take the time and context into account. What your trading style is like. Does it match? I had someone with VWAP the other day. VWAP, yeah, sure, that's a great thing. It's basically a moving average, right? It's an average price, but it's weighted by volume. So if that price moves up a couple of points, but the significant more volume comes in, it's going to adjust that a little bit. Okay, that's all it is. It's just a moving average divided by the number of contracts. So it's a pretty cool tool. However, if you're 10 minutes into the market, the U.S. market, and you're trying to trade a VWAP, good luck. Because you're calculating off of what happened the last 16 hours. And then the first 10, 15 minutes of the US market, there's more volume than the entire beginning of the market combined. It is totally going to get you askew. So if you're going to use VWAP, wait a half hour and now take a look at what's going on. Or use an anchored VWAP and start it at the beginning of the US session.
It's a very good point, Robert.
Yeah, it's a long-winded answer for what he was asking about.
But it makes a lot of sense, Yeah,
just get comfortable and take your time.
Right.
Yeah. Do you have something else there, Eddie? Because I can jump on to my next.
You want to jump on to your next thing? Got any questions? Please post those in. Now, Robert, we talk about taking small wins, and when I talk to traders too. Everybody's looking for that big win, and you can't stress the fact more that go for the base hit. And for those that don't understand that, the small winner. And the thing is, they'd say, I left so much on the table. I could have made 800, but I only made 500. The thing is, put it into perspective. You got a winning trade. You've got a positive P&L. Now, here's the thing. I mean, if the opportunity is still in that market area, in that level, who's to say you can't get back in again? Okay. But what I'm trying to say is if you do take these small wins, it does build confidence. Okay. Like Michael. Okay. Perfect example. He had the beginning of the day was not his day. Okay. But he sat back, was very patient, found opportunity, came back and put up $35 positive. And he was very happy with that. See, now that is a huge confidence builder, even though there was $35 positive, because he had gotten himself deep out of the hole. He worked, he took his time, very systematically, and he reached that point where I got myself out of the hole. I'm positive. And another good thing is he didn't get greedy, saying, okay, you know what, since I'm up 35, let's see if I can make it 300. He seemed very happy about what happened. And that's what I'm trying to get at. $35 on the day from down 2,000. That's building confidence.
That's building confidence. He knows what he's doing. It's funny. If I was coaching him, I would have told him to walk. Being down that much,
I probably would have too.
Limit.
Yeah.
Yeah. But you know what? Hey, we're our own thing. It's not a judgment call whatsoever. What the guys did over his career, done a hell of a lot more than I have. So, who am I to talk? But if I was coaching, I'd be like, yep, great job. Take that loss, put that in the L column. You're down, you hit your limits. And he saw opportunities, and I'm not speaking for him, but obviously he did. Otherwise he wouldn't have kept trading. He brought himself back up, come up with a scratch day on the little positive side. And that's a kudos, man. That's just the way it goes. When you're in this business and in this game, in these markets for a long time, you're going to see that. You're going to see that for sure.
Sarah wants to know, what's your definition of a small win?
I trade NQ, and my wins are between like 4 and 12 points.
All right, and then she was talking S&P, so
S&Ps
2 and 6.
Yep, 2 and 6. Yep.
Okay.
Here's the reason, folks. Here's the reason. Because we can look at the wins, and Eddie says this too. It's not what you win, it's what you can afford to lose, right? So if I know that I'm going for a $200 trade, and even at a 1-to-1 ratio, if that's a $200 loss, okay? That's $200. Do I want to lose $200 on my trade? If that's the max I can do, then I should be looking for $200 for wins, or 400 if you're using that type of ratio. I don't trade ratios, but if you are, right, if we look for 2-to-1, so if I'm willing to risk $200, I should be looking for $400, not $3,000. Okay, we need to be real on this, and that's going to bring me into, it's a great segue. Thank you for the question. You must be looking at my notes. That's a great segue into the next thing I wanted to touch on with these small wins is, what is the actual size of your trading account? Let's put that into context. I always talk about taking time, context of the markets. I have, let's say, I have a $50,000. My money, my account, forgetting anything else, I have 50 grand in my own account. Throw in the comments, how much money can I lose before the broker shuts me off? How much money can I pull out of I have 50 grand, my own cash. I put it in my own brokerage account. How much of that $50,000 can I lose? I'll give it 2 seconds to look at the comments to see if anybody gets it. Because we're going to talk about the differences of leverage and difference of markets and difference of account sizes. Nice. J Trades was the first one. Matt Reed, the first one. You all are 100% correct. If I go to my broker personal account and I put 50 grand in it, I can lose $50,000. Okay, if I have a 50K account in the combine, how much can I lose before I lose the account? Anybody know off the top of their head? There we go. 2,000. 50K account. Max loss limit is 2,000. 1,000 is close. 1,000 is a daily loss limit, but you still have your account. You can still trade. It just stops you for the day. I can lose $2,000. So if with that in mind, here they come. 2,000, 2,000, 2,000. Great. With that in mind, if you take the fact that that you can lose $2,000, that would mean me taking my money and putting $2,000 into a trading account. That's what I can lose. Would I trade that $2,000 differently than I would trade $50,000 differently? Would I trade those different? Answer that question for yourself. I know my answer. Because if I'm trading my own money on a $2,000 account before I blow everything out, I will not be losing $1,000 in a day. That is half my account in one day, folks. I will not be doing that. I assure you. Okay?
Yeah, that's why we have these personal loss limits.
Yeah, absolutely. The personal loss limits, 100%, Eddie. 100%. This is the crux of what I'm talking about. Small wins. Small wins are great. Small wins equal small losses. Not equal, but you're going to incur small losses. If I'm shooting for a 10-point trade or, excuse me, a 10-point trade, I am not going to let a loss go 60 points against me. There's no way. There's no way. But if I have a 10-point target, I'll let it go 10, 15 points and try to take that. Okay. Max Mitch, $2,000 is 4% gone. If you have a full 50 grand, but $2,000 on a 50K combine, the whole thing is gone. I just want y'all, I have this big problem. I want everybody to do well. Everybody in Topstep has the same problem. We want traders to do well, bar none. That's what we're here for. All of this is free. All this professional coaching. We have so much to offer. There are so many resources, folks. We're here for you. Get in there. Spend your $50 on your 50K or 100 on 100K, whatever. Take it slow and steady. Get those base hits. We hear it all the time. This is not new news. Take the small wins. Keep your losses tight. Get out of the trades if it's not going your way. And just chip away at it. It's interesting. I have the stat. I'm going to pull it up right now because I'm the one that does the stats on the overnight, and I get the information and prepare it all, and then give it to some others in the back end here. James and JD, I'll give you a shout out there that really put this stuff together. And I'm going to pull up the graphic because it was posted today. Here we go. It was a new one, not a new one, but it's a new one that we put in this week. And this is what it is. All funded traders last week. The entire week, all funded traders in Topstep, their average winning trade was $290, folks. $290. You want to see a $3,000 day? I'll show you a $3,200 loss the next day. There it is.
Right.
That's the graphic I was looking at. Thank you, Jack. Average losing trade 158. It's a 1.8 to 1. So we always quote around 2 to 1. Very, very, very close. This is what I'm trying to share. I was really adamant that I talked about these small wins today. And it's reasoning because I see this stuff all the time. It's $290. Let's go the high side. Let's say that's $300. Well, how many points ES is that if you're trading ES? Right? How many points? 6. Does that mean you need a 6-point trade? Or can you take 2 3-point trades? Why would I take 2 3-point trades? Because my loss is 3 points. I can afford it. If I take 6, I'm going to lose $300. If I'm losing $300 towards my $1,000 daily loss limit, what good is that?
Yeah.
My opinion, right? These are my own thoughts. I said at the beginning, and I'm not going on anybody. That's just the way I do it. I'm just sharing how I look at the market. This is philosophy, not advice. I just want to make sure I'm clear about that because we all trade different styles.
Right. Professor.
Yes, sir.
Lucas has a question.
Okay.
Do you change your risk reward at all during the day?
That's a super question. Thank you for Lucas. I don't have one. So the answer is yes, I do, and I don't have one. Again, I'm an outlier. I am different. I do not follow the norm of a win-loss ratio of 2 to 1 risk to reward. I do not follow that. Okay. Mine is pretty much I'm my own guys, my own thing. If I'm coaching you and that fits you, yep, we'll stand by it. If you're asking me personally, mine is entirely skewed. I don't think I have less than a 1-to-1. So if I'm looking for 10 points, I'm not going to have anything less than a 10-point stop. It'll probably be around a 15, 18. I just know that I don't go over 20 because 20 points, NQ, 1 contract is $400. And I will not risk any more than that on a single trade. I don't let it go to 20 hardly ever because I'm just, again, it's the range bars. I see them stacking up. I see a little bit lower, see a little bit lower. I'm getting out. Most of my wins are between I look for trades between like 3 or 4 points, and I'll plot up to about 12 points, and I'll generally take around like 4 to 8. That's kind of my sweet spot, right? So let's average that. Let's say 5. That's $100 trade. Mm-hmm. You do that 5 or 6 times. You know, I don't know how many trades there were today. I could look at it, but I think there were 21 trades or something like that. Lost 3 of them. Won 3.
Nice.
I mean, lost 3. Yeah, but they're small. I mean, I have 2 trades on here to 3 points.
It's good management, though. I mean, management's a big part.
It's just the way that I look at the market, folks. It's just, I'm not trying to push it on anybody. I don't. I'm just sharing what it's. This is why we don't have big accounts. We don't have it. Think of yourself. Open up a separate bank account, put $2,000 in it, and then every time you lose $500, take $500 out of it somewhere. See how long that money lasts, right?
Right.
Little wins along the way. What else you got, Eddie? Hopefully,
and one thing too is we got to remember different account sizes. RP says, does it differ a lot depending on the account size? And I mean, my suggestion would be, I mean, if you can't trade small, you can't trade big. But what do you got on that, Rob?
I agree with the same thing. I don't trade big at all, ever. It's personal preference. Why? Because I'm a sore loser. There's a book out there, like, the best loser wins. Yeah, I don't lose very well. But the thing is, when I do lose, it's not often, and when I do, it's small. So I can handle it. It doesn't trigger my emotions. It doesn't get under my skin. It's just I just swing and a miss. But I'm not a home run hitter. I will bunt, and I will take them chip shots, and I will scoot it to first as quickly as possible.
And then you'll see, I mean, those base hits turning into doubles, triples, home runs. I have definitely strayed away from looking for that big winner because I'm happy with I put a lot of things into perspective. And I mean, a lot of people on this planet wish they were in our shoes. Millions and millions and billions of people. And we're lucky to be where we are. So I'm not looking for any huge win, but if you trade enough and you've been in the business long enough, you're going to have these days where you've hit 3 grand slams in one game. And then of course you're going to have those days where you've struck out 5 times at 4 at bats. And I mean, it's going to happen, but let it happen. Let it come to you. Okay. I know that we say, let the market come to you. And it's exactly what I'm talking about, is let these bigger trades develop for you.
Absolutely. I'm just going to ask Jack, who's running, we lovingly call God, GAWD or GAHD.
Yes.
I just put something in the producer channel. I do have a screenshot for those that are watching. Just as an example, I didn't want to do a whole screen sharing about this, but I do the screen sharing tomorrow night. I'll be giving a coaching session, and then next Thursday we'll be building an automated trading system from the ground up, from scratch. So that's going to be a real fun. Yeah, we're going to do that. I've been asked a lot of that. We take NinjaTrader and we're just going to build it. And that's the other thing about while Jack is getting that image ready for me. That's the other thing about emotions. That's one thing that I personally found a way to take the psychology and emotional trading aspect out of my trading. I am an emotional guy. I'm an Aries. I'm an Irishman. I'm type A. I'm from New England. I'm just like, that's just Massachusetts. I'm just forward thinking, rah, rah, rah. The way I take it out is I just created some automated trading stuff. And it just does it on its own. It doesn't do, I'm not like 100%. I don't just turn it on and let it go thinking, well, the longer it runs, the more money I'm going to make. That is not the case. It just gets in that. I may be sitting, I may go in the kitchen and, grab a coffee or use the restroom. I'll get bing, bing, order filled. And then I come back and I'm like, oh, look at that. Ooh, that doesn't look good. And I'll close it for a small win, small loss. Right. You're looking at my chart now. Jack, thanks for sharing that. You are looking at my chart. That is today, and those are the trades. That is it. That's all I do. You're looking at a 40 range chart, and what it does, if you're looking, there you go. And the greens are pending longs. There's no red on there. The red would be a pending short, and the gray means that's a trade that's been completed. And if you look, if the that zone there that I call it was below the market, it was a short through it. If it was above the market, it was a long through it. It has nothing to do with structure. It has nothing to do with the news. It has nothing to do with averages. It has nothing to do with overnight highs and lows. Nothing. The irony is I don't have volume profile on there. I was showing someone else this, and volume profile is typically on the right-hand side. I didn't have it turned on, so my apologies. I would have shown you that on there as well. But that's it. It's a 40 range chart. It just bounces back and forth and says, oh, I think that if you break over this level, you should be going through this area. And to me, it looks pretty convincing. It's not too bad.
Right.
And I know that how big my stop loss is because I can look at those candles and I know that every one is 10 points in height. So if I want a 20-point stop, I just look back 2 candles. Simple. To me, it makes sense. I'm not pushing this on anybody. This, to me, it makes sense. This is how I get those small wins. In every trade, I have that, and this is something I made, and on everything that I made on there was all those trades were between 3 and 10 points. If it wasn't 3 points, it didn't plot. If it was over 10, it didn't plot. So I know right away those are some that are best for me. Okay, that's it. That's the way it goes. Yeah.
Okay.
If there's any more questions, I have one more topic to finish up after we get through all the questions.
Where are you doing this automated trading session again, real quick? And I think Coach Jay.
Yep, I will open. I'm just looking at it right now on the schedule. It's in Discord. So for those that
Coach Jay,
are not, it's in Discord, and on the top left it says events. So the next one that I have is there's 2 coming. It's tomorrow night, 5 p.m. Tomorrow night, 5 p.m. Central. It's called Alternative Ways to Use Common Indicators. So I just give you a different outlook. If you're using moving average, I'm going to give you a couple different ways that you probably never thought of to use it. For example, don't show me the moving average on the chart unless ADX, which is the strength of a trend, is strong. So I can look at a chart and say, look, there's no moving average on it. But when the trend is strong, it's going to put that average on the chart for me. It just takes my brain out of the picture. I don't have to look at trends and try to go, is it going up? Is it going down? What's the slope on it? It's all done automatically. So that's a really good one for tomorrow night. And the one about the automation, creating a bot, is on October 3rd. That is starting at 5 p.m. It is labeled as an advanced course. You don't need to know any programming or any coding for that whatsoever. We're using NinjaTrader. There is a strategy builder built into it, and we'll be using that for your automated system. We're going to start from scratch to completion. It's a 2-hour one. All of these are 1 hours that we do, but I got an approval to have this one for 2 hours because I want to take it slow and make sure we go through everything, and we want to make sure we get a functioning system. It'll be a basic. I don't even know if it'll be profitable, but it's just coming up with, hey, let's do this, and we're in a long trade, and this bot's in a long trade. Why did it go short? It's like we don't want to go short until we have a long trade has been exited, and I'm going to show you how to do that. Creating it from start to finish.
All right, Robbie, you got about 5 minutes here, and then we got to head off to a very important meeting.
Absolutely, yeah. Looking forward to that.
Why don't we just sum it up right now? You got 5 minutes, and let's come full circle here.
Come full circle is take a look at the account that you have, account size, take your trading amounts into consideration. Keep that risk down. You don't want to lose $1,000 of a $2,000 account in one day. And the thing about the trading philosophy versus psychology, that's just a big one. If we can get the psychology out of it, since that has the largest impact on our trading, and we can do that by putting our plan together, following our processes, and then not expecting the market to do what you want. And this is the line I wanted to put in there to close with Eddie. I say this all the time. If we're coming to the market and we have a plan that we're going to trade on an instrument at a certain time, and we say, I'm going to take 3 trades, and if I lose them, I'm done. Here's my thought on this. No disrespect. Here's my thought. That just means that I'm expecting the market to do what I want it to do, when I want it to do it, at the time, and during the 3 trades that I'm going to take using the strategy that I'm using. That is a very, very tall order. Really, seriously, consider that. This is how I trade. I use this indicator at this point in time, and I take 3 trades and follow this process. Well, if you're doing that, you're expecting the market to do what you want to do, when you want to do it using your strategy. Reconsider. Just take a look at different things. Take those pieces. Look at other strats, look at other candle types, look at other instruments, other chart times, look at other strategies. I did a whole seminar last week I went through the 6 different chart types that we have in TS Trader. And it's mind-blowing. Not for me, but it's just mind-blowing to look at, because we're going to take this trade, and then you switch to chart type and you go, how about now? And they're like, wow, there's no way I would have taken that. Use that to your advantage. Use your practice account and use your time off.
Beautiful.
I appreciate everybody being here. I appreciate everybody for coming, listening to me spew this stuff out for the last hour. Seriously,
Professor,
really
you did very well.
show.
You did very well.
One question, Robert. Where will this seminar you're doing be again? Is it on Discord?
Yeah, it will be in Discord. We have the Discord channel. I will put the link in Discord, and if we can copy it into the YouTube, that would be great. On the top left, there's an events area, and it's not just me. There's, I think, maybe 6 or 7 in there now, and all the coaches, we go in there, and we'll do a couple of them a week, and we all have different topics on a sheet that we said, I like to talk about this, and I like to talk about that. So it is in Discord. It's live. It's on Zoom. We pull it up just like this. All of us, we have slides prepared. We have talking points. And we have charts that we pull up. They're really super. I've tuned into almost every one of them now, at least for some point. And some of these coaches are just, I love listening to Jay and to Ray and to Paul and Dakota. They're amazing. I learn something every single time. Highly encourage it.
Oh, yeah. Real quick here for Farzad is asking, how do we get the practice account? It's included with your trading combine. All right. You got any questions? Contact support at topstep.com. But otherwise, Robert, thank you very much for a wonderful Coach's Corner, something a little different than we usually talk about. And we're going to get Robert back here again. The professor is going to be back here again. So, Robert, I appreciate it once again. Any closing words here before we close up shop for the day?
I just wanted to thank everybody again for your time. I know it's coming up on 12 to 1 o'clock Central Time. Everybody's around lunch, so I appreciate you all. Thanks for listening to me. You can find me in Discord. I'm in there most of the time. We all have our own coaches channels in there. Feel free to hit me up. I'd be happy to help you out. And trade well, everybody.
Trade well. All right, folks, that is it for today. We will be back here tomorrow, Hasta Mañana, 8 a.m. Central Time. That's Chicago time. Get some rest here, and we'll see you tomorrow.
No, that'll be all good.